in the appropriate way with customers. We've done work with Ford, really advising consumers on how they can get extended credit facilities from them. So I think companies need to look out for consumers, but I think particularly packaged goods companies that are looking at long-term brand building. And the evidence we saw from the last recession was that companies that invest in long-term brand building come out 30 to 40% stronger than those that don't. And I think that's a message that people will take home. At the same time, clearly there is going to be pressure on budgets, certainly in the second quarter. Current expectations less in the third and fourth quarter, but I think we are seeing, quite a sharp downturn in spend in the short term, which is what we need to be ready for.
Now, Mark, you mentioned that you're working with your clients right now, trying to have appropriate content. How are you navigating, A, the challenge of actually physically creating new content when most people are in lockdown, and B, also trying to figure out what that appropriate content is for advertising right now, and whether it's okay to have ads next to coronavirus news, which I know has been an issue that's really damaged a lot of news publishers?
Yes, there was a recent campaign in the UK with publishers saying, asking advertisers to run content next to coronavirus news. And I do think that consumers can figure out what's advertising or what's news. And I wouldn't personally advocate avoiding coronavirus news, particularly given there's so much of it, out there in the market. One example is the work we did with Procter & Gamble. We can all play our role in this crisis. And the governor of Ohio contacted Procter & Gamble and asked them to help educate young people about the dangers of coronavirus. Young people in many parts of the world think that they're immune. They're not immune. So we worked with P&G and an influencer called Charlie D'Amelio on TikTok to create a dance called distance dancing. Now, this has been watched 3.88 billion times in the last 7 days. So you can see if you can talk to people in the right way, using influencers who young people can relate to, you can get your message across, in a very relevant way. We can all play our part in this.
Yeah. Mark, as a CEO of a major company with so many different business segments in it, with so much of your workforce working remotely right now, longer term, even as we emerge from the worst of this outbreak, how do you think it will change or shape or shift your view towards where people are working and what creates the most productivity?
This is a massive experiment, isn't it, that we're all going through. And, as someone who may have been slightly more cynical about the ability for people to work from home, clearly we can see that people can work from home. We can use stock photography, we can use typography, we can recut old film to get work made, and people are doing that effectively. So I think that the need for people to sort of sit at their desk is going to be less. Across WPP, this is really building, I'd say, a really strong community of people around the company working together, collaborating. I did a call this morning with our team in Spain. We had 1,300 people on the call, all from their home, talking to them about what they should do, how they could do it. And I think, the problem is that this is an anxious time for most people. And I can tell you, from Europe, and I'm sure it's the same for people in New York at the moment, people are feeling anxious, and it's not easy working from home, whether you have 2 young kids like I do, whether you're living on your own, whether you have a partner. It's not easy. We're used to going into the office and working there. So I don't know that we're all going to be working from home from the future, but I suspect that we'll probably be investing in less commercial real estate in 5 years' time than we have today. And I think that we will learn to trust our people to work and be much more focused on measuring their output rather than how many hours a day they're sitting behind their desk.
And just a final question, Mark, as you look ahead to the future when we have emerged on the other side of this coronavirus crisis, how different do you think your business and the advertising industry will look? And is there a risk that some of your brands will start working directly with the big platforms like Facebook and Google and try to cut the ad agencies out of the equation?
No, I'm not concerned about that. When I talk to CEOs and CMOs, they say they need us more than ever. They need our advice, on the tonality and the right forms of communication and how to deal with the platforms. And I think actually some of the sort of glamour of building in-house agencies and the fixed costs associated with that will go away, when companies learn, what they need to do with those in events such as this. So I think, we're an optimistic industry by definition, and I think that's right. But I think we're an industry that understands that what we do is going to be even more important. When we come out of this, some consumers will be very optimistic. Some of them will be in a different place that have lost loved ones and family members. So we have to get the communications right. But I think what we do in terms of helping companies come out of this will be more critical than ever.
Thanks, Mark. Thanks so much.
Thanks, Julia.
For joining us. John?
Thank you. Right.
And Julia, thank you for bringing us that. And as we go to break, take a look at the FANG stocks today. Amazon faring the best, down just 1 1/3% roughly. Alphabet, the worst, down 3.8%. We'll be right back. Stay with us.
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Not all heroes wear capes, but most wear tights.
And here we go. Now it's underway. Cover on Rowan. Wait a second.
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis of the latest WrestleMania, turn on the WWE podcast. Or listen to the Steve Austin Show for no-holds-barred conversations with wrestling's biggest personalities.
It's good to be here tonight. It's an empty building.
For these and more, search sports and scroll down to the world of wrestling.
Closing. Shark Tank, tonight starting at 8 Eastern. CNBC, get yours.
Is your credit card debt stressing you out? Take control. A personal loan could help you get out of debt faster and save money. Credible helps you find actual pre-qualified rates from multiple lenders in just 3 minutes.
Visit Credible.com to see how much you could save.
Personal Capital wants to know, do you have a plan for your finances?
I have a plan for retirement.
For college savings.
For investing.
I can see all of my accounts and my investments.
All my investments and more in one place.
I feel good about my finances. Finally. Download the free Personal Capital app today. You can feel good about your finances, and Personal Capital is here to help. Visit personalcapital.com today.
Hey, guy. ED issues? We got this. Today's your day. Go to forhims.com/ED.
Now let's get over to Rick Santelli at the CME Group in Chicago. Rick?
Thanks, John. Boy, so many things going on. I heard Carl earlier talking about the complexion of the yield curve. There was a time when it was inverted. Oh, my goodness, recession. Of course, we all wanted steep. Then we get steep, and we're like, wow, I don't know if the steep's really good, because look at what it took to arrive here. Of course, lately it's been steep. But something happened on the way to the forum in the last 36 hours. It's reversed a bit. As a matter of fact, look at an intraday of 10-year note yields hovering at 59, down 8 basis points. 2 years right now are like down 1 at 24. So if we open the chart up, the first thing I want to point out is, 54 basis points, the all-time low close. We're getting very close. And that isn't necessarily a good thing. It really does reflect more of a nervousness the lower those yields go. Sometimes too low is just not good. And if you look at the yield curve today alone, obviously, if we're down 8 on 10s and we're only down 1 on 2s, it's flattened 7 basis points. We're now hovering 10s to 2s around 35, 36. So we want to continue to monitor these. As far as the Federal Reserve, listen, I'm a tough grader. I'm always a tough grader. The two programs I'd like to concentrate on today is repo liquidity and swap lines. And I'll tell you what, you have to give the Fed an A+ for both these programs. And I'll tell you why. On repo liquidity, well, I have friends that trade repo, and let's make this just gloss over it in a simple way. Basically, what they're telling me today is reverse repo volume and dollar amounts are bigger than repo. What does that mean in English? The Fed has provided so much liquidity, reserve repos are now maybe the vogue, and that is a good thing. Now, in terms of swap lines, something has happened in the last 24 hours. And before I even get to this chart, I'd like to say, many of you are watching this on an LED TV. Do you know how it works? No, but you can change the channel, adjust the volume, right? Yes, because you don't really need to totally understand dollar-yen basis swap. All you need to understand is that when this goes up, what it means is that it's easier to procure dollars outside of the U.S. As a matter of fact, it's so easy that right now, approaching 20 basis points, it's the best it's ever been. But when dollars are cheap overseas or a little more expensive here, that'll be a Santelli exchange for another day. But yesterday's swap enlargement program by the Fed was a major success. Morgan, back to you.
An A+ from Rick Santelli. I feel like that's breaking news in of itself. Rick, thank you. We're going to take a quick commercial break. All the major averages are lower right now. Stay with us.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
Not all heroes wear capes, but most wear tights.
And here we go. Now it's underway. Cover on Rowan. Wait a second.
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis of the latest WrestleMania, turn on the WWE podcast. Or listen to the Steve Austin Show for no-holds-barred conversations with wrestling's biggest personalities.
It's good to be here tonight. It's an empty building.
For these and more, search sports and scroll down to the world of wrestling.
It's TuneIn Sports on this day. April 1st, 1991.
Medicare supplement plans endorsed by AARP, selected for meeting their high standards of quality and service. This type of plan lets you say yes to any doctor or hospital that accepts Medicare patients.
Do you accept Medicare patients? I sure do.
So call United Healthcare today and ask for your free decision guide.
Oh, and happy birthday or retirement in advance.
The Barkins are empty nesters now. Should they downsize? Probably. Will they? Not as long as Thanksgiving is a holiday. Planning for the future is about more than just money. Let Equitable be your guide.
Good morning, everybody.
Squawk Box, covering the 3 R's on the latest readiness, relief, and record-setting results, impacting the nation, your family, and your money. Squawk Box, 6 a.m. Eastern. Watch and listen live on the CNBC app.
Welcome back. New York State legislators, some of them pushing for a potential rent freeze. Our Robert Frank has the latest. Robert.
Good morning, John. Well, today is rent day. 2/3 of New Yorkers are renters, so that's 5.5 million renters. And by my math, that works out to nearly $20 billion in rent checks that are due today. Maybe 40% of those will not be paid because they just can't. Now, homeowners and landlords, of course, have received mortgage forbearance. Renters, though, are still legally required to pay their rent. That's created a cancel rent movement online and on the streets. Protesters in New York and California calling for a rent strike, a big digital protest planned today at 2 p.m. Eastern. And John, as he mentioned, there's a bill making its way through Albany that would allow New York State residents to cancel their rent. Remember, not to delay it, but just cancel it for 3 months. The bill would also provide some relief for landlords through mortgage freezes, but the domino effects here are huge, not just for the banks and the mortgage holders, but also the city of New York, which of course gets a big part of its revenue, maybe up to a third, from property taxes. Now, Governor Cuomo has put a 3-month freeze on evictions, but lawmakers saying that's not enough for those millions of New Yorkers who today will have to, or in some cases won't be able to, write those checks. Carl, back over to you.
All right, Robert, thank you. Robert Frank. Let's check in with Mike Santoli, talk a bit about the markets here as we slide back a bit below 2,500 on the S&P. Mike, interesting 24 hours where we had more calls from well-known market watchers, Howard Marks, Gunlack, some reporting on Stephen Cohen, and a lot of them are expecting us to at some point pull back here and retest some lows.
Yeah, Carl, I mean, that is what the historical odds tell you, at least, that it's going to get a little bit sloppy or continue sloppy after you get this kind of crash and then bounce. I don't know that anyone has a particular edge on what's going to drive it. One thing about these environments, there was so much of a fixation in recent days on this idea of pension and other asset allocators kind of reshifting back into equities, this rebalance trade. The reason we fixated on it so much, it seems to me, is because there's nothing else to grab hold of, really, fundamentally or otherwise. Perhaps didn't come through as much as expected, and most of the kind of news on Fed measures and stimulus is kind of out there already. That being said, down 2 or 3%. This is not the same kind of rush for the exits we saw at the lows a week ago Monday. So it does seem to be just a little bit of a trendless action. And as I said, 70% or some of these kind of waterfall declines, according to Ned Davis Research, do end up challenging those lows and perhaps breaking them by a little bit. So that's all we have to go on in these environments.
Someone said at the beginning of the week, Mike, it's a week without major catalysts, even though we are getting some high-frequency labor data, at least, and obviously ISM. But at this point, they're just not baked enough to give us a true sense of where we are at the moment.
No, not nearly. That's why I think when the market goes down 2% in a day, when it goes up 3% in a day, it's not necessarily sniffing out anything in particular about the macro. I don't think right now the market itself has a fix on exactly what the trend looks like, what the proper metrics are at this point. It's responding to credit conditions. That has softened up in the last couple of days, but certainly off the worst levels we saw about 10 days ago. So I do think it's almost like the context is the catalyst. It's are we going to heal? Have the capital markets kind of adjusted and repriced enough for the whatever probable environment out there? But unless you tell the duration, as everybody keeps saying, of this lockdown, there's no way to really get at that. Now we're at the leading edge of a default cycle of some description out there now in terms of corporates getting into some trouble. So that all is it has to be absorbed as well.
Mike, searching for metaphors to understand this market action, is it kind of like we had the major earthquake market-wise, and now these are little aftershocks? Is the bad news that the president sort of forecasted last night perhaps priced in at this point, though that's a ghastly thing to contemplate?
Sure. No, I think it's very hard to do that with any precision, but I do think the aftershock metaphor probably works reasonably well. It's very hard to also figure out, though, if everybody's bracing for the aftershock, does it still come? Well, yeah, if we're talking about geology, it still comes. But if we're talking about a behavioral system like the markets, it's not clear right now. I do think, though, buyers are going to be patient. Everyone's kind of hewing to the same familiar kind of quality type names. If you look at the momentum indexes, they've been vastly outperforming because it's all the big cap software and tech and also utilities. So to me, nobody's brave enough to kind of overthink it and look through this trough period and say, oh, let me start to do some bottom fishing and bargain hunting. It just doesn't seem like that's the time for that.
Yeah, Mike, meantime, we're talking about equities, but bond market certainly seems to be open for business. Seema Modi just reported on Carnival earlier in the hour. We saw record issuance for companies for investment grade last week as well. What is the read-through there?
It's definitely open for business. Obviously, you're going to pay up probably if you're not one of the better credits, and that's par for the course. So I do think it's a net positive. It's progress based on where we are now versus where we were. Fed buying, $800 billion worth of coupon debt out there in a week, it's going to have its effect. And I do think that that's something, though, it's going to get a little bit ragged if you look at the way that credit is trading, not just the new issuance market. And that, to me, is one of the leading metrics that we have to go on right now with regard to stocks as well.
All right, Mike, we'll watch that. In the meantime, a couple stories on the tape from House Speaker Pelosi outlining some parameters of an infrastructure bill that potentially we could be talking about more in the coming days, which would include some money for community health centers. Let's get to the half, the judge, and Kramer back at HQ.
We do appreciate it, Carl. Thanks so much. And we welcome all of you to the Halftime Report. I'm Scott Wapner, continuing our breaking news coverage of the markets, which, as you can see, are selling off rather sharply today. We're going to do what we always do. We'll try and make sense of it with our investment committee and our own Jim Cramer today. Joe Terranova is here along with Steve Weiss and Kerry Firestone, the CEO of RES Asset Management, with us today. We're going to start with stocks, the continuation of yesterday's sell-off. And Jim, I turn to you. You know, we've asked aloud, really, how the market was going to deal with some of the very difficult and grim numbers that we were going to have to deal with. And maybe today we're finding out. Is that what this is?
Yeah, but I'll tell you what's so interesting. There are very few people, I believe, who really thought that the rosy scenario was going to occur. I know we had that press conference this weekend, was a little disorganized, but the sudden recognition of a number that I think, unfortunately, a lot of people were like kind of hoping wasn't going to happen is jarring the market. But and by the way, Jeffrey Gundlach, he's right. I mean, this is like one of the easier rollovers to predict. But I want people to like look into their own brains and hearts and really answer. Did you really think it was only going to be a couple thousand people? Did you really think that? I mean, when they finally announced that number, if that should cause the sell-off, then you got to rethink whether you want to be in stocks. Because I think that they're just making up numbers. As Dr. Fauci says, hey, that's the input. So, I mean, don't sell on that. Sell because a company's doing badly. Because it's not a good thing to sell off a press conference. Never a good thing.
I hear you. You know, I don't know what, frankly, you expect people to believe or not. You know, they were told early on that the numbers by some were not going to be that big. And I don't know what you make of that. I don't want to really get into that. I do think it comes down to, at least for us today, a question of the numbers are going to get worse. Mm-hmm. We know that. How are the markets going to deal with that? And it's either you think we're going back to the lows or lower, or you think we're going to be in this maybe tighter range. You mentioned Gundlach, and just to bring everybody up to date on why you referenced him, he's saying the sell-off's not over, that the March lows will be surpassed in April. So how are we supposed to deal with all that?
Well, I mean, before we get to the rest of the investment committee, what I would say is the indices themselves are really your enemy. Look at the way the indices are actively managed. They get rid of Macy's. They had a really good company like Carrier. It's just an oddity. But what I think is that another thing that Gundlach's been stressing, I'd love to kick it around with the group. Look, if the balance sheet's bad, you can't own the stock. And if you're in the index, you're owning that bad balance sheet stock. I'm looking at Carnival raising money, and I'm thinking, well, wow, the gullibility of everybody. But Carnival's a real stock. You get it in the index. But I'd say I'd rather be in the companies that have really good balance sheets like a J&J and not be in a company that just paid 13% for money. And that the index just doesn't intrigue me as much as individual stocks here. And that we should go back to owning companies because, boy, the index has got a lot of crummy companies in it.
I'm glad you went there, too, Jim. And I'll put that to Steve Weiss first, because I do find on Twitter, at least today, people do want ideas still in this kind of environment. They do want names to at least take a look at. And if today's not the day necessarily to buy them and tomorrow isn't either, maybe there is a day down the road to take a look at some of the names. And we'll do that in a minute with Jim, because he does have a barbell approach and many names on his list. But Weiss, how do you view the markets today in light of those numbers we got yesterday evening from the task force and from the president? It was... you know, it's jarring to hear that we could be facing numbers the likes of 100,000, 200,000. God, we hope that they're not like that. But that's what the market is grappling with.
So my game plan has been to take what it gives me, which is
signals from government.
We'll get back to you in a second. We're obviously having some issues with Steve Weiss. Joe, are you there? And can you? Why don't you answer that same question that I asked Steve? We'll see how you do.
So, Scott, unfortunately for all of us, the healthcare numbers are what is going to be driving the tape. But I agree with what Jim is saying. I think that passive investing, that's the end of passive investing. It's over. You need to be active in this market once again. And it's about defining quality. And quality in this environment is about cash on hand and the ability to quickly restore your earnings visibility. So you're selecting companies in that environment. As far as the tape today, I would view this more as that we are in a range. You had a very extreme move to the upside. The catalyst behind that was the end of month rebalancing. Well, that's now gone on April 1st. We knew that was going to remove itself. So now you're in a little bit of this range. 2,300 to 2,344 is incredibly important in maintaining and protecting the 2191 low. I will say this, though. The financial sector right now is the point of the most concern. The U.S. 10-year Treasury right now is trading 60 basis points. Scott, that's the lowest level it's traded at since March 10th. I don't want to have a conversation about negative rates introduced once again. The banks are the issue right now. That's the challenge. That's where the weakness is. And if the market is going to be falling further, it's going to be on oil and it's going to be on the financials.
And Kerry Firestone, why don't you give us your thoughts? Joe says we're in a range. Gundlach says we're going back to the lows, if not lower. And, whatever makes a market, Brian Belsky, our friend, is sticking to his 3,400 target on the S&P over the next 12 months and does think that you're going to get a rather swift snapback on the other side of this.
Well, Scott and Jim, I'd like to say hi to Jim. I can hear you. I can't see you, but nice to hear you, classmate.
I know Kerry since, 45 years?
Yeah, a long time. Yeah. I know. We were just barely toddlers.
When this is all over, we'll go somewhere with a couple of cold ones.
The old days, I used to say that she looked better than ever. You're not allowed to say that anymore, so I take it back.
So thank you, Jim. So last week we had talked about how the market was oversold. So remember, at a certain point, we thought when it hit, 22.60. 14 and a half times some normalized earnings, whenever that begins, that there were opportunities. There were selective opportunities to buy stock. And in fact, we retraced 16% of that move down, the 33% down, 16% up. So now the market perhaps got ahead of itself. So if we've got the next month where we're going to see the numbers start to move higher on the deaths in the U.S., around the world. We're going to hit a peak, and we're going to listen to CEOs explain that they have terrible back-end earnings. They're going to look at bad first-quarter earnings. They won't be able to give guidance for second quarter or third quarter earnings, and that clearly is uncertainty that the market doesn't like. So it makes sense that we trade down for a while. That doesn't mean we necessarily have to go below those lows, retest the lows. We're definitely in a range. But as Jim has pointed out, and others, you have to pay attention to what the market is telling us in terms of valuation. We have to look at companies and say, gosh, if this is an opportunity, let's consider it here, and not just say, wow, we have to sell everything. We know there's bad news coming, and let's just see what the market presents us with opportunities over the next few weeks, because a month from now, we're going to start to feel better, hopefully about the health of the nation, and certainly about what's coming with opening the economy.
Okay, so we have Steve Weiss back with us now, who's phoned in for us. So, Steve, why don't you weigh in, and then we're going to talk more individual names, because I want to go through this list that Jim has compiled. I think it's good, and I think our viewers will be into that. Go ahead.
So here's how I look at it. My plan has been the same plan it's been for the last month and change, which is take what the market gives you. If you're able to trade, use types. But in terms of overall market, we had nice balance, as Kerry points out. But my view has been and remains we're going lower in April. You can't talk about valuation at all because you don't know what valuation is. It's a moving target. So the right place, the right point for the market was down 30%, erasing 2019 gains. The news is going to get worse. It's going to get a lot worse. We keep talking about, the COVID-related problems, which means what we're all so sad to see, the illness and the death. But we're not talking about also the deficit in companies, the upside-down balance sheets. Jim referenced them. But you got to weigh what you felt about companies before and how you're going to feel about them going forward. Now, Jim's right. You don't want to own bad balance sheets. The time to own those, you're coming out of it because the junk's going to outperform the quality. But right now, I've been selling exposure the last 2 days. I got pleasantly surprised on Monday. I thought the market would be down. It wasn't, so I took that opportunity. I sold some more yesterday, and I'm selling some more today. No one rule is preserve capital. If you look at all the people who have said once-in-a-lifetime buying opportunities, You can't have 3 once-in-a-lifetime buying opportunities. You can only have 1. And right now, this is not it. And by the way, if you go look over the records of those one-in-a-lifetime buying opportunities, they underperformed the market.
Well, I do
quality
think
names, put it early.
I do think that those who are talking about once-in-a-lifetime buying opportunities weren't doing so at the same time while trying to call the exact bottom, right? I mean, they're willing.
I agree with you.
Right. So I want to be careful in how we kind of characterize, what they were saying in the manner in which they were really doing that. Nobody was exactly picking a bottom.
Right. And let me say this also. Their bias is honest because, like Jim Lebenthal is a great asset manager, it's not his job to capital between various asset classes or cash. He's giving money to put into the market. To his credit, he's holding some back. So those biases are natural. If you invest with a long-only manager, you expect them to put it all in the market, period. It's got to be fully invested.
Well, let me go back.
I don't have to be.
Right, I hear you. Let me go back to you, Jim, because you do have this list of this barbell approach, and and we often hear people come on the show and talk barbells and the way that you own stocks, on one side versus the other, and try and weight them in some magnitude. You say you can't own the bank. I want to go through sort of what you can't own. Okay, you can't own the banks. You say. You can't own the retailers. You can't own travel and transport. And most importantly, you cannot buy oil stocks.
Right.
So that eliminates a group of trouble. What can you buy and why? And let's make a caveat too as we're saying this. And I don't want our viewers to get the wrong idea when you say what you will. This doesn't necessarily mean buy today, this minute.
No. Yeah. I mean, I presented basically a recommended list. And the barbell is, just so people know, one of them is this is probably going to work right now. And it's because of either it has to do with office at home, because obviously people can't go to a central office anymore, or it has to do with certain things that have to do with the data center, because of the huge explosion of data that's going converted all over the place because people are at home. And then the other half of the barbell is when we come out. Because when we come out, and I don't know when we come out, but I really like Harry's analysis that at this time next month is probably going to look a little better. You're going to have to start buying the Disneys and the Boeings. I know I always listen to Stephanie. Boeing's a tough one for me. Disney, my Chapel Trust owns. Wish didn't, but will want to own it eventually. I think that Amazon is going to do well, but I think right now Amazon's a little too high. Walmart is up today. These are the part of the barbell that I say you have to own coming out. So, I mean, I balance what you have to own coming out versus what you can own right now, because I think that the long-only people should be intrigued by Ring Central, by Citrix, by Cloudflare. I do think that Bristol Myers works. Johnson & Johnson, AAA balance sheet. I like Mondelez here. They're doing a pretty good job, except for the gum business. So I like some stocks here now, and I like some stocks later, but I sure don't like most of the market. And I want to make the point that the stocks that are up on the wall are stocks that are intriguing, not necessarily intriguing today, but they're intriguing.
How long do you think you'd have to wait, Jim, before the no-touchers start to enter back into the conversation? I mean, look, we've had some people come on the show in the last couple of weeks and buy some of the no-touchers on your list, whether they're travel-related or otherwise, suggesting that the prices had come down so much, and there is going to be another side to this.
I got a business.
We sure all hope.
I got a business in Italy, and I got a daughter in Madrid. And these are probably two of the places that you would not necessarily like to have a business or a daughter. Madrid is not done. I don't know what my daughter just says. Listen, it's one of the greatest nightlife cities, and they were very late to trying to come to grips with it. She loves the city. Northern Italy, again, same thing. Gripped, didn't really change, and yet Italy has been good for the last 6 days. You had a month and a half of just terror, and then Italy got better. We have a better healthcare system. We obviously had a mayor in New York that was, until about 4 weeks ago, was saying have a great time. That's very much like what it was in northern Italy. So I guess what I'm saying is you take the two worst areas, which are Spain and Italy, and there is light at the end of the tunnel in Italy, and I'm hoping there'll be light at the tunnel by the end of this week in Spain. And there's there's what you got. I mean, you got 6-7 weeks, and I would say that I don't know how. I think ours started the night that Adam Silver pulled the plug on the NBA. President Adams. Oh, I'm sorry, no, he's commissioner of NBA. He kind of started it, and Rita Wilson and Tom Hanks. I mean, it was that one night where we realized, you know what, it's here. And ever since then, it's all downhill. And I think that it was all downhill in Italy when Milan Fashion Week. And then you can count the days from Milan Fashion Week, and it means that we got some real bad days ahead, but they do run out.
Yeah. I mean, let's hope, because, as we sort of spring forward here and we enter April, it's the time where we expect the numbers to get bad and hard to bear. And every day it's going to be an update.
Be horrible. Governor Cuomo, man, he's way too honest, right? His brother. Not way too honest. You know what I mean?
No.
You guys watch Governor Cuomo? Any of you guys?
Well, he's he's been given his updates every day, and he's the one who is, the one where the market is perhaps paying the most attention to right now, beyond Fauci and Dr. Birx and some of the medical experts like Dr. Gottlieb, because New York is such an epicenter and this hot spot that when Governor Cuomo speaks, it's like everybody sort of stops and listens and says, okay, this is the reality of where we are. And he's set to speak, by the way, shortly. We're going to dip into that when he goes through the numbers, as we always do.
Hey, Carrie, in Boston, it's okay right now, Carrie, right? It's just not so bad.
I don't know. Okay, we've had a lot of social distancing, I think, here longer than in New York. Most businesses, retail, like my husband's business, the restaurants, bars, all closed before New York. There are some essential people that can come. It's not great, but it's not like New York City. It's not nearly as dense as New York City. Right. Can I just ask, Scott, can we put a chart up? We pulled together a chart. I think that you've got it there. It's the 10 worst quarters in recent history.
Mm-hmm.
And I think that would go back to 87. So what you see is that 6 months in advance, ahead, you have 5 quarters that have nice returns. 6 months later, there are 3 that are bad, and there are 2 that are sort of flattish. I'm not saying that these other quarters where the market was down replicate this. This is clearly unique. But 6 months for the market can be a long time. And just having the perspective of what we're going to be seeing in the economy, in the healthcare system, and the state of the world in 6 months, it's a long time from now. If you think back 6 months, no one had ever heard the word coronavirus.
For sure. But in other recessions or recessionary periods where you may have had those declines, Carrie, you do tend to come out on the other side with some level of certainty and, dare I say, a return to normalcy. This is clouded by the definition of what normalcy is may very well change on the other side of this, and we're all going to have to come to grips with that when we actually get to the other side.
That's a good point, Scott. Right. And here's how I look at it. When I short a stock, for example, or when I go long a stock, I say, where can I be wrong? Where's my error going to be? What's my downside? What's my upside? Here, I can't imagine where I'm going to be wrong. The only place I could be wrong is that we conquer the virus in a shorter period of time, which would be a week, not 2 weeks, not 3 weeks, not a month. And that's unreasonable to make. And the numbers that Carrie put up, they're interesting, but frankly, they just don't give me any comfort. When I can go down another 20% in the market, another 10%, and I'm looking at single digits or even 11% upside. Number one, I don't know when that 6 months is going to begin. And number two, it's not a great risk-reward scenario in a situation where this is not going to be cured like in 2008 by fiscal policy. It's just not
right. I want to go back to the list, and I didn't mean to jump away from it so quickly. And Joe, as you look at the names that we can put them back on the wall as well, that Jim has put together for people to take a look in his barbell portfolio of what you maybe can think about now and what you can think about on the other side of this. Why don't you weigh in on some of these, whether you own them or not, things you're looking at or may end up looking at?
Yeah, and if you listen to doing this television from a remote location, if you don't mind, I'm going to look to my left to look at that list. So obviously,
we're not looking at you anyway. We're looking at the wall, so don't worry about it.
I have Amazon. I think that's a great call on Jim's part. I like Jim's assertion, though, in just defining what not to own. I think that's so incredibly important in this environment, defining where the ultimate risk is going to be. And I think technology, looking at this list, obviously stands out for the cash-rich balance sheets, the visibility of earnings. I think real estate will do well. Low private sector borrowing costs and a return to that suburban lifestyle. And I think the consumer will do well. The one name that I don't see on that list, Jim, is Microsoft. And I view Microsoft really as the shining star in technology in this circumstance. Think about the amount of people that need to utilize the cloud, and think about how much usage remotely is going to be conducted for Microsoft Office and Skype. So I think Microsoft in this environment, obviously it's a position I own, belongs on that list. Well, the other name I would add to that possibly, Jim, would be Home Depot.
All right, just as TV's a funny thing. I did a whole piece about Microsoft and why you should own it last night. So I kind of referenced, and I also like Microsoft. So you're dead right. There was a piece about it. If you wanted to know the one stock that you should own, it's Microsoft. So in the interest of not just making it sound like that I didn't, it was in the piece, so don't worry. Home Depot was one that I really want to talk about. It's down badly. There was a firm that raised numbers today, raised price target, one that lowered. You got lumber coming down. That should be good. You got the snow, right?
Yeah.
So I just think there's got to be a level that all of us can agree it's the right way to go. I had Marvin Ellison from Lowe's. They raised a lot of money, too. Another one, big box stores that are going to be on the other side triumphant. Home Depot is definitely one of them.
So, Joe, you
Jim, don't you think that...
Go ahead. I'm sorry, go ahead.
Jim, don't you think that Home Depot and Lowe's will embrace the type of delivery strategy that's working so well right now for the Amazon type companies?
Well, it could be. Look, Home Depot's got a pretty good .com, but Lowe's doesn't. And now why do I say that? Because Marvin said it to me. He's got to spend much more money, and the previous management didn't really understand the value of the .com. So Marvin's behind, but Marvin's such a good manager. I like Lowe's very much. Had them on last week, and they raised the capital. Whoever raised the capital has got the balance sheet. Home Depot got a great balance sheet. On the other side is going to win, and I do think there's room for Lowe's and Home Depot. I hope everybody agrees with me. If you don't, tell me, because it's an interesting question.
I was going to come back at you on that with just what about the contractor business that these companies do, that these stores get, that they're not getting now because I don't know. Maybe people don't seem to be letting a lot of workers into their house.
Well, look, I was just talking to my wife. We bought a beach house, ill-timed, and I said, "Are you working on it?" And she goes, "Well, don't you know there's a no work rule?" Well, that's like, so I got the no work rule at the beach house, I got the no work at the bar, and I got the no work at the restaurant. I mean, I am like supporting everyone and getting nothing. What a great situation. Look at me, I'm the Treasury Secretary here. No, I mean, I think that you're absolutely right. If you can't build, what is a guy, and plus they can't even get a mask anyway.
But when does that normalize? So
I don't know.
It doesn't. I don't follow these companies on such granular ground level as you, Jim. I don't know what their percentage business is. Home Depot, for example, of what they do for professional contractors versus the average
It's huge.
Joe.
They went over the contractor. That's why Lowe's went down. That Lowe's got to get that business back. But one of the reasons why my Chapel Trust doesn't own Home Depot is because when I hear that there are places in the country where you're not allowed to do any work, that is just dreadful. And I think it's not just the area that we bought the house in.
Does that become prohibitive then?
Ill-advised purchase of the
Suboptimal?
Suboptimal, ill-advised. Beautiful
but
house.
That will start up soon.
We had someone, I did it. I did it so Diana Olick has some house behind her that she can use.
Yeah. I mean, does it become prohibitive, though, to owning the stock?
I think so.
I own the stock, Scott, so I'm going to forgive me for...
No.
Forgive me for taking the optimistic view on this, but I think Home Depot in the next couple of months is going to be a very valuable franchise to all of us as consumers. We're going to have the pent-up demand, and we're going to be spending at Home Depot, whether they're delivering to us or we have the ability to go pick up with the social distancing restrictions.
I understand.
I'm going to have the optimism
I think it's a timing issue, though.
Yes.
I mean, I think it could be at 160, and then it would be a different company. I don't know whether you guys feel this way, but I think we're one of those moments where 150, 160, I really want Home Depot, and 180, I don't. In other words, the price selectivity along with owning individual stocks and the end of those single stock risk commitments that people make it so that Home Depot, there's a price where I really want to own it. But there's also a date, Joe. When we're further along, when the curve is bending, I think Home Depot's terrific, and I should have put it up there, but I picked Costco because, holy cow, Costco has got it down. It's like Costco's been waiting for this moment. It is an incredible juggernaut right now. It's such a joy to go to, and they have everything.
Let's just break away for just a minute. Hang on just real quick, guys. I'm sorry.
None of the shows are breaking away.
No, you're going to want to hear this because it's the governor of New York, Andrew Cuomo, is updating us on the latest numbers just moments ago. Let's take a listen now.
We're still on our way up the mountain. The number of testing has increased. I'm very proud of this. More you test, the more more positives. I understand that, but the more you test, the more good you're doing. The number of tested is up 15,000, 220,000 total people now tested. Positive cases are up to 7,900. Total cases 83,712. Down to one county that now doesn't have a COVID case. That's what you're going to see going all across the nation. Well, we're a rural area. We're not going to get it. Oh, really? Go visit upstate New York if you want to talk about rural areas. We have rural areas. And just the way it's gone through rural New York, it will go through rural America. Total numbers, 83,000 tested positive, 12,000 people currently hospitalized. That's up 1,200 people, 3,000 people in ICU, 6,000 patients discharged. That's up 1,167. People go into the hospital, they get better, they leave the hospital. Most impacted states, New York is at 83,000. New Jersey is at 18,000. That's Governor Phil Murphy, who's been a great partner to me, a great partner to the people of this state. Governor Ned Lamont, also in Connecticut, has been a great partner. We've done a lot of great work as a region, which is very unusual. You know, those lines between states often become walls, not with Governor Murphy and not with Governor Lamont. We're working together, and we're going to work cooperatively with New Jersey because they have a real problem. California's ticking up. Michigan's ticking up. Florida is even ticking up. Massachusetts, but no one is anywhere near where we are, right? 83,000 compared to 18. Number of deaths, 1,900, up from 1,550. That number will continue to go up. That is people who have been on ventilators for a period of time. If you go on a ventilator, there's roughly only a 20% chance that you will come off the ventilator. The longer you're on the ventilator, the lower the chance you come off. We're still looking for a curve. We're still looking to see where we hit the plateau. Total number of new hospitalized. Again, you see the number goes up and down, but the overall trajectory of the number is up. Change in ICU admissions, bounce here, bounce there, but the overall number is still up. Change in intubations, same thing. The line is basically a line that is going up. Change in number of discharged, line is going up. Why? More people going in, more people treated, more people coming out. Everyone asks the same questions, and they're all good questions. When is this going to be over? What happens? How does it end? And people want answers. I understand people want answers. I want answers. But the answer is nobody knows for sure. Anyone who goes on cable TV and says, or network TV and says, this is what is going to happen, that's not true.
That's the governor of New York, Andrew Cuomo, there giving an update on the case numbers in New York State and in the city. 83,000 cases now in New York State, more than 47,000 cases in New York City. The death toll in New York State is now at 1,941, with the governor saying, quote, we're still on our way up the mountain. And Jim, I come back to you because it's this idea of where we are on this mountain and whether stocks can get any sort of legitimate footing as long as you're talking about going up a mountain and not about either flattening a curve or coming down the other side. But let's be realistic about that, too, based on what Dr. Fauci said last evening, that even when you start to peak and start to go down, you're going to go down at a much slower pace than you did on the way that you went up.
No, you're right. Geez, did you know that only 20% get off the ventilator? I have ResMed on tonight to talk about how they can make CPAP machines into ventilators. I had thought the record was much better. I guess that's terrible. I agree with you, Scott. Every time I hear something like 400 more people died, it takes my breath away, and I think, I don't know. Should I really be thinking about stocks? And it's our job, obviously, but I think you're right. It takes the psyche and just makes it so that your orientation is not to buy but to sell. And I think that a lot of us agree that you shouldn't just be selling everything here. But I think a lot of us also feel like, wow, this is one of the worst times the country's ever faced.
I mean, for a great number of our viewers, though, Jim, I reckon that you would tell them either sitting here now or if they stopped you on the street and said, what should I do? The majority of your answers right now would probably be do nothing. Am I right or am I wrong?
You're right. I mean, I do think that if you own individual stocks, there are some moves that you have to make. If you're a person who has a 401k, I don't want you going in and out, footing out of your 401k. I think that if you haven't put your contribution in, as we get closer to when we climb and we finish climbing the mountain, maybe you commit half. But I agree. It's very hard to be able to say, you know what, this is the moment, because I just heard Cuomo say really terrible things, because tomorrow you've got that same this is the moment. Was it Steve that was saying that, there are three great bottoms of this bottom? I mean, that press conference is just like, get me out of here. And what you have to do is you have to just hold your breath and own stocks. And you can only hold your breath for so long. But I'm urging people not to bolt. But I would not put new money in this market yet.
Because the sad reality, Jim, is that the governor is likely going to be repeating that phrase for a couple weeks.
I know.
Still on our way up the mountain.
I mean, I just hope that the rest of the country sees what's going on in New York and really takes it seriously. Not to get. There was a big group of people greeting the Navy ship. When you get together, you get COVID. I mean, that's what happens. Jim, I haven't seen my wife in 3 weeks. Why? Well, I don't know. I don't want COVID.
The state of Florida, Jim, still does not have a statewide stay-at-home order.
How's that possible?
It just does not. Despite what the medical experts have recommended, including Dr. Gottlieb himself on our special last night at 7 when I asked him directly about that, he said that was a mistake. And now I'm wondering if until we see that and until we start seeing a mountain become a curve, whether stocks have any realistic chance of getting a footing.
I've said not until you get the national lockdown do I feel good about the market. I said that the other night. It was the number one thing we need to see is national lockdown. I take my cue from Dr. Gottlieb. Dr. Gottlieb and Dr. Fauci both know how bad this is, okay? And I think that both of them want to just say, listen, this is it. This is the pandemic. This is the Spanish flu. I mean, this is going to be like that unless you take it seriously, meaning don't have crowds, don't go anywhere. A national lockdown would make it so that we'd save so many more lives. And I think that should be the goal.
Yeah. Let's step away. We'll take a quick break. We'll come back. We'll talk with Jim, the rest of our investment committee, when we come back.
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow at TuneIn and always be in the know.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
Not all heroes wear capes, but most wear tights.
And here we go. Now it's underway. Cover on Rowan. Wait a second.
Keep up with everything happening in the wild world of pro wrestling with the TuneIn podcast. For expert analysis of the latest WrestleMania, turn on the WWE podcast. Or listen to the Steve Austin Show for no-holds-barred conversations with wrestling's biggest personalities.
It's good to be here tonight. It's an empty building. But
For these and more, search sports and scroll down to the world of wrestling.
There are 3 victims of cybercrime every second. When a criminal has your personal information, they can do all sorts of things in your name. Criminals can use ransomware, spyware, or malware to gain access to information, like your name, your birthday, and even your social security number.
That's why Norton and LifeLock are now part of one company, providing an all-in-one membership for your cyber safety that gives you identity theft protection, device security, a VPN for online privacy, and more. And if you have an identity theft problem, we'll work to fix it with our $1 million protection package.
There are new cyber threats out there every day. So protecting yourself isn't a one-time job, it's an ongoing need. Now is the time to make sure that you have the right plan in place. Don't wait.
Norton 360 with LifeLock. Use promo code GET25 to save 25% off your first year and get a free shredder with annual membership. Call now to start your membership or visit lifelock.com/TV.
Welcome back. I'm Julia Borston in Los Angeles with breaking news. AT&T is appointing Jason Kilar as CEO of Warner Media effective May 1st. Kilar was founding CEO of Hulu back in 2007, and he ran Hulu until 2013. After that, he founded a digital video service called Vessel, which he later sold to Verizon. Now, then on May 1st, John Stankey, who is currently both CEO of Warner Media as well as COO of AT&T, will focus just on being COO of AT&T. All of this comes ahead of the launch of HBO Max, which is scheduled for sometime between mid to late May. Warner Media, in addition to HBO Max, includes traditional HBO plus Warner Brothers, Turner, effectively all the assets from AT&T's acquisition of Time Warner. Kilar's job is a big one, which includes dealing with Hollywood talent as well as navigating cord cutting and the shift to going direct to consumer with this HBO Max launch. I will be talking to both John Stankey and Jason Kilar coming up in Power Lunch at 2:30 p.m. Eastern. Guys, back over to you.
All right, we'll look forward to that. Julia, thank you so much. That's Julia Borston out on the West Coast for us. Well, the unprecedented dislocation in the economy has seen a number of companies race to raise cash from the credit markets or secure loans from banks, and such is the subject of a new story in the New York Times, and one of the authors is Kate Kelly, who joins us once again. Kate, it's good to have you back on.
Scott, thanks so much for having me. Great to be hearing you guys as well.
So what should we be thinking about your report in the bigger picture? These companies who are clearly racing to get their liquidity in order in one way or the other, and what the ramifications of it will be.
Well, I guess two things. I mean, one is some kind of silver lining here so far, at least, seems to be that the banking system is holding up pretty well. They are lending, despite the fact that the numbers have been somewhat astronomical. I mean, just for context, and we cite this in our story, Fed numbers that were compiled by Autonomous Research show that in a single recent week, the week ending March 18th, which is the most recent for which we had it available, the new loans in the system from banks amounted to $243 billion, and that is normally twice what you would see in a standard year over the last 20 years. So the activity is enormous, but the banks seem to be lending and holding up fairly well. What's striking, though, is it just quantifies for you what we feel anecdotally to be true, which is that companies, a range of them, companies with junk bond ratings, like Yum Brands the other day, in a deal that was actually oversubscribed, even though It was the first junk bond offering since March 4th, as well as investment-grade companies that arguably shouldn't need the capital or could hold off, are going to the public markets, and they're also tapping bank lines of credit or tapping into revolvers, which revolvers were long regarded as the ultimate rainy day emergency measure. And to be sure, some of these companies are in emergency times, but others are not quite there yet, and they're just trying to shore up their balance sheet. So I think, although that's an additional drain on the system, that could give investors some comfort.
I wonder also, though, the other side of it, though, the amount of money, Kate, that the banks are lending to these companies who are trying to get cash. We're not just talking about accessing the credit markets, obviously. If that can come back and haunt the banks in the long run, if this crisis gets even worse than we already worry about.
Sure. So, I mean, if this continues, it obviously could start to be much more of a drain. And although the banks have been through stress testing ever since the financial crisis, under much kind of stricter auspices to check their leverage ratios and to check their capital buffers and to check their overall health, it was said to me by a number of people, nobody ever expected to see these company revolvers drawn en masse in a given situation. So I think we're not there yet, but I do think that over time, if this activity continues, it could start to be an issue. And you saw in the commercial paper markets and other short-term financing markets recently that there was a lot of dislocation and spreads were extremely wide. And that was because banks were deploying balance sheet to deal with some of these credit revolvers as opposed to being able to put money into these other shorter-term markets. So, for example, the chair of the investment banking practice at J.P. Morgan, Carlos Hernandez, has been telling people recently he wouldn't be surprised if corporations went through a kind of tough reckoning with their balance sheets and their reliance on relatively short-term funding like commercial paper, which frequently has a duration of about a year or less, although it can be on the longer side, and trying to look to longer-term liquidity sources.
Jim Cramer is with us today, Kate, fortuitously for sure, since we're having this conversation. So, Jim, why don't you weigh in on Kate's reporting from the corporate perspective, but also the banking side? We know that the banks have gone through, umpteen thousand stress tests, and you talked to Corbat, the CEO of Citi, earlier today. How are you thinking about all of this?
Well, first, also congratulate Kate and my old friend Peter Eves, who worked with me at the Street. Peter doesn't get enough credit. He's one of the greatest reporters in the world. When I read this piece, which was so excellent, I came down to it's a downer, as it should be, because there's a lot of risk. But we get to the third to last paragraph, and it said you've got this assistant professor from Wharton, Peter Conti Brown. Don't know him. The Fed has to violate its own regulations to turn down the very businesses that are most in need of its interventions. I think that the Fed reads you, Kate. This is a different Fed from the previous days where they would hey, listen, the journalists, what do they know? I think that this time you've got Jay Powell. By the way, you got Steve Mnuchin. These are people who read the Journal. They read the Times. They read your piece, and they say, you know what? We are not going to let what they write about happen. We can head this off. Michael Corbat this morning talking about how he's in constant contact, that they can head this off. There won't be so bad. And the difference between this one and 2007, 2009 is that 2007, 2009 happened. So it's entirely possible that this mess of the revolvers that you chronicle so well, it may not be the mess because maybe we see suddenly that the 10 worst loans are taken by the Fed because they read you. And that's the great thing about the government and the Fed this time. They are not academics. They are not saying that Kate Kelly and Peter Eves don't know anything. What they're saying is, I read that piece, and you know what? I got to be ready to buy those bad loans as much as I don't want to. Heck, maybe I got to take a stake in Carnival Cruise. I don't know. But that is the virtue. Keep writing these pieces. They read them. They take action. They refuse to know nothing. They insist on knowing something. What a pleasure. And as much as we may say, think that Bernanke in the end got us out of it, he was tone deaf for 2 years. Not these guys. They're reading your piece and they're saying, we got to get that so it's under control. And that's the difference between now and 2007 and 2009. You're writing.
Kate, I'm going to give you the
Jim,
last word, then I got to go.
Thanks so much. And Peter is a gem, my co-writer on this. This is the second financial crisis we've covered together, if one would call it that. But Jim, that's a great point, and I think you're referring to one of the Fed rules, which is that a company has to be current on its so-called undisputed debts in the 90 days before an emergency loan program. And as we understand it, the government is debating whether they can find some leeway here and bring aid to some of the companies that most need it, even if they're violating some of the strictures of that policy. And it does seem that the government has been relatively nimble and open to solutions here, as we saw through the CARES Act. So I think there is a recognition of the suddenness and the shocking and profound impact of the crisis. And it seems that the banks are doing their part so far. But, yeah, I mean, there are going to be many more legs to this stool.
Yeah. Kate, we appreciate your reporting and certainly coming on to discuss it with us. We'll talk to you soon, I'm sure.
Thank you, Scott.
All right. That's Kate Kelly from the New York Times. Thankfully, the banks are in a better place today than they were in a good many years. One bank analyst, though, is cutting his estimates and price targets for the third time in just 2 months. His name's Mike Mayo. He's the senior analyst at Wells Fargo. He joins us now on the Newsline. Mike, welcome back.
Thanks for having me.
So you heard Kate's reporting, and we can address that in a minute as it relates to the banks and lending, et cetera, and risks that may be out there. But the third time in 2 months now that you've cut estimates. Tell me about it.
Well, look, these are sobering times for banks. It's short-term earnings hell. This morning we reduced our bank estimates for the third time in 2 months, as you said. We have bank credit losses going up 2 to 3 times over 2 years. Net interest margins down at least a fourth. A recession is likely. We're now assuming a U-shaped recovery, not a V-shaped recovery. And our estimates are 1/3. That's 1/3 below consensus. So I don't think it's a spoiler alert to say expect banks to guide earnings lower by a lot in 2 weeks when they report results. And so these are tough times in the short term.
You still have overweight rating on Citigroup?
Yeah, look.
You still have overweight rating on Bank of America?
Absolutely.
You still have an overweight rating on JP Morgan and Goldman Sachs?
Absolutely. Look, this is an earnings recession. This is not a balance sheet recession. It's night and day versus the global financial crisis. We're in this period, 13-day period, where banks are in what's called a blackout period. They can't talk to investors. Until JP Morgan reports results in a couple weeks, you're in this information void.
What do you mean? I was going to bring Kramer in right now.
He doesn't like Wells Fargo.
Kramer had Mike Corbat on.
He doesn't have Wells Fargo's not on his buy list.
So
Scott.
look, versus 2009.
No, Mayo can't talk Wells Fargo since he works for them.
No wonder.
Your silence said a lot.
By the way, I agree with Jim Cramer. Like, raising awareness of the issue helps prevent from the issue playing out. And versus 2009, the banking industry has $1 trillion more in capital, $2 trillion more in cash, $3 trillion more in deposits. And by the way, this isn't a striking number. The growth rate in loans in 1 week is a record, $250 billion. Wow. And that's why the article was written. But that doesn't, first, the growth in deposits is even more. So banks are doing what they are supposed to do. You take a deposit, you make loans. A lot of this is cautioned by borrowers who take out the loans and put it right into the deposits. And this does not go on forever. And here's the big number here. The response to the article is the level of cash or near cash in the banking industry is 10 times the level of unfunded corporate commitments. In other words, U.S. banks have cash and near cash of $4 trillion. Unfunded corporate commitments are $4 trillion. But you know what those drawdowns were in the global financial crisis? 1/10. So if it's like the global financial crisis, you have $4 trillion of cash for $400 billion of drawn down corporate commitments, or 10 times the level. So banks have the capital, banks have the liquidity, they can support the economy. And you know what else is really underappreciated? And this came through in in Jim Cramer's interview with the CEO of Citigroup earlier. The operational resiliency of the banking industry. 160,000 people working remotely at Citigroup. 150,000 people working remotely at Bank of America. 98% of Goldman Sachs employees working remotely using secondary and tertiary operation centers. So it's not just the balance sheet resiliency, but it's also the operational resiliency. So when you get results in a couple weeks, you're going to say, yes, there were drawdowns. Yes, we're taking big charges. We have $20 billion of extra reserves for loan losses just in the first quarter for Citigroup, Bank of America, and JP Morgan alone. That's a big increase, and that's partly due to this accounting change known as CECL. But to the extent that the biggest banks can take much of their reserve builds for an entire recession in one quarter and still should grow book value for this year, that's a sign of resiliency. So not only will the banks weather this situation, but coming out on the other side, we think they'll be re-rated higher once investors and others realize that banks are now a pillar of strength and stability, which they were the exact opposite of for the global financial crisis.
Appreciate it very much.
Can I just say, and I didn't mean to joke, there's a guy I know who's much smarter than I am. I actually spent a weekend with him about a month ago. His name's Charlie Sharp. He's the CEO of Wells Fargo. I think he's the smartest banker in the world. I know there are a lot of smart guys, Jamie Dimon, Charlie Sharp. He's the most intimidating guy, too. He bought 173,000 shares of Wells Fargo at $28.69. That's $5 million. I actually talked about on a conference call for Fractional Alerts, my Chuckle Trust, that I want to maybe buy that stock at an 8% yield just because I would finally have done something smarter than Charlie Sharp.
I wonder, look, if we see it not on a plan either, Jim. Mike Mayo, thank you very much. It's good to have you on, certainly as we talk about the markets. I wonder if we're going to see more CEOs like Mr. Scharf buy their own
I
stock.
bet you do.
And not on plans, right? Just coming out in the open market and just doing it.
Michael Corbett, I mean, look, he knows the book value is $70. And now, yes, obviously, we can just say, well, we read the excellent piece by Peter and by Kate and just say, okay, well, book value is really 60. All right, well, you know, the stock's much lower. I think you'll see Mike buy. We want Jamie to do, to get healthy fast. But I bet you we see Brian buy, Brian Moynihan. I mean, these guys they listen, they read the articles we do. Michael Mayo talked about the idea that everyone sees the articles. It's a terrible time. But 1 month from now, if it's not a terrible time, will we look back and say Warren Buffett's favorite bank traded it with an 8% yield with a CEO we all love, but no, we didn't want to own it because the ventilator number, that's what was the ventilator number.
Let me, I'm going to take a quick break, but I do, Jim, want to note that we're at the lows of the day for the markets. Dow's given up 21,000.
Did anyone here on this panel think it was going to be anything other than a lousy day? I say 1,200. I say down 1,200. Anybody got worse than me? 1,200? I got to say 1,200. Once I got 1,220.
No, please don't turn into an auctioneer.
No? So for 1,200.
We're at 20,985 on the Dow, but we're at the lows across the board. We've got final thoughts, maybe a trade or two on the other side of this break.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
It's TuneIn Sports on this day, March 27th, 1988. The Chicago Bulls and Atlanta Hawks match up in the Georgia Dome in Atlanta. Now, it draws a crowd of 62,046, the largest in any game in the NBA history. And the Bulls win 89-74.
Well, there's no question the spotlight today will focus on Dominique. Given what happened last week, I would think there's some incentive for Dominique
to listen to conversations breaking down the moments just like this. Click on Sports to be part of the discussion on TuneIn.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Not all heroes wear capes, but most wear tights.
And here we go. Now it's underway. Cover on Rowan. Wait a second.
Keep up with everything happening in the wild world of pro wrestling with the TuneIn podcast. For expert analysis of the latest WrestleMania, turn on the WWE podcast. Or listen to the Steve Austin Show for no-holds-barred conversations with wrestling's biggest personalities.
It's good to be here tonight. It's an empty building. But
For these and more, search sports and scroll down to the world of wrestling.
Cover dental care, eyeglasses, hearing aids, fitness programs, vitamins, even healthy meals and rides to the doctor. With this kind of coverage, you do not need a Medicare supplement insurance plan. You will access your benefits through your Medicare Part C plan for one low and oftentimes $0 monthly plan premium. You deserve to get the most from your Medicare benefits. Call now for free information that may help you get more coverage for less money. There is no obligation to enroll. Whether for yourself or someone you love, call the number on the screen now. Call now.
Just before 1 p.m. in the East, there's your market fixture. Dow is bouncing around that 21,000 level, recapturing it just moments ago. We're still looking at a loss of greater than 4% for the Dow and the S&P. NASDAQ not quite as bad, but still bad. 7,400 hanging above that. It's a loss of nearly 300. That's 3 3/4% for the NASDAQ. Russell 2000 is getting obliterated today. It's down nearly 7%.
That's unbelievable.
Just noticed that too, Jim.
Financials, yeah.
Smaller financials.
Energy, yeah, that white
and energy.
Petroleum.
Ugly. We do have a big interview to tell you about, again, tomorrow. It's Jim Chanos is going to be with us, the noted investor. He's going to join us at noon, talk about the markets, what his short strategies are today, where he sees things going from here. We'll talk about some of the names that all of you know that he's been invested in, maybe some new ones as well. Our breaking news coverage continues this evening as well. I'll see you at 7 o'clock Eastern again on our special report, Markets in Turmoil. Don't want to miss that. Jim, you have a big show coming up tonight. Why don't you tell us what you have?
Yeah, I got Cisco, and we're talking with Chuck Robbins about what a company's doing during this era. He's got WebEx, which is, of course, the office at home. It's doing well. ResMed, I put nickel in because they can turn those CPAP machines into ventilators. I'm checking that number that Governor Cuomo said. That seems too high, that 80% die are on a ventilator. PVH, Manny doesn't ever stand. He comes on good or bad, even though we know a lot of his product is sold in department stores. Here I'm thinking about Tommy Hilfiger, Calvin Klein, very, very important. Nestle's, one of the huge companies that may be a great safe haven. I love today, and I wish Ms. Firestone were in person, because what I would do is say, I want to place an order at your husband's store when it reopens, because that's a great small business that he has, all right?
I love that.
And you know,
love
I
that,
love
Jim.
his stuff.
Thank you.
I bought something for Lisa there. I love that store.
Carrie, give us a final thought, if you would.
I think that we should feel encouraged. I know it's really hard to be encouraged at all, but the governor got on and talked about what's happening in New York. The market's down 4.5%. 2 weeks ago, the market would be down 8%. Hearing that, because it would be new, and we're beginning to understand what's happening in this country, and I think that the market has begun to absorb that and become conditioned to experiencing what we're going through and starting to think what we're going to look like on the other side. How's that, Jim?
I think that's right. I think that's right, Gary. I also think that there are people at Gilead right now and Regeneron, and they're saying, you know what? Wait till you see what we have. Roche, let me show you what we have. Moderna, let me show you. I don't want to bet against the people who took science. You were one of the people who took science. You were really smart at college. Everybody knew that. But I don't want to bet against those people in that. Remember those people in college that really took it seriously and they went to med school? I mean, holy cow, you want to bet against those guys? I mean, the guys who had no fun whatsoever at college?
I have... Joe, give me a quick thought. I have less than a minute, and I want to get to Weiss, too.
Yeah, I would say unified acceptance is probably the biggest catalyst we could have. I think it's important for investors to understand time is what they need right now, and I would focus on risk. As Jim said before, I would not be buying the stocks that have fallen most significantly. Stick with the quality names.
Okay, appreciate that. Steve Weiss, you got 20 seconds.
If you're an individual investor, ride the wave. If you have cash, don't put it in yet. Two names I like to out of this FTI Consulting for all the restructuring, and I just bought my third Peloton. They can't fill the order. Backlog is huge.
Your third what?
What?
Peloton.
Peloton.
Oh, I get you. You're breaking up a little bit. Wow, 3 of them.
Jeez, my wife would have places to put 3 separate dresses on.
One place for the kids.
Thank you, everybody. We'll talk to you soon. Jim, thank you as always. We'll see you tonight. Kelly picks it up now.
Scott, thanks, and hi, everybody. It's a new month, it's a new quarter, but it's the same volatile markets today. Let's check on all 3 major averages, which are down for the 3rd day in 4 now and pretty much near session lows here. The Dow's drop of 921 is just about 50 points off the low. The president saying the U.S. should prepare for a, quote, very, very painful 2 weeks from the coronavirus. Italy's death count improved today, but officials are saying the U.S. should prepare for 100 to 240,000 deaths, and that's just continuing to weigh on sentiment here. Another decline in oil also weighing on the markets, even with crude coming off its worst quarter ever, and now the bankruptcies are starting. Check on the action today. Crude down another 1%, just over $20. And just in the past hour, New York Governor Andrew Cuomo, as you just heard, said only 20% of those placed on a ventilator live to come off it, and warned this outbreak is far from over. Listen.
What we're looking at now is the apex, top of the curve, roughly at the end of April, which means another month of this.
Sure enough, stocks took a move lower on those comments. Let's get more on today's market action from Bob Bassani, who joins me now. Bob, with a look at all of these different factors here as we kick off the new quarter.
Yeah. And a very sober assessment, again, from Governor Cuomo. And he did impact the market. Let me just show you the S&P 500, Kelly. Governor Cuomo came on about 12:15 Eastern time. We were at 2490 on the S&P and drifted lower from there. So we're 2468. So maybe 25 points on the S&P drifting to the downside. And there you see an intraday chart of that. As a result, the market has resumed what I call the defensive crouch that it always does when things get, the news is bad. Walmart, for example, Procter & Gamble, Kroger, Clorox, Campbell's Soup, all among the few groups that are on the upside today. REITs and banks getting hit very hard. Banks like Fifth Third down 7, 8, 9%. Energy also weak. We had a bankruptcy filing from Whiting. Retailers also notably to the downside. If you take a look, Macy's is getting thrown out of the S&P 500 into the small cap, not the mid cap. And there's a lot of companies down there in the retail space that are in that very small cap group right now, including Kohl's, Nordstrom, Gap, all around $2 billion in market capitalization. More on that in the next hour. Kelly, back to you.
Wow, those are big declines. Bob, thanks, and we'll see you then. Meantime, the 10-year yield is dropping back below 0.6% today, and maybe that's why we're seeing such poor action across the financials. Let's get to Rick Santelli with more on that and all the bond market moves today. Rick?
Yes, Kelly. Actually, we're moving a little bit back above 60, but let's look at the entire curve. 2-year note yields are down a couple of basis points, but they're basically at 7-year lows on their closing yields. But as you move down the curve, history, we talk to history. Look at a 2-day of 3-year notes. The fact that it's down at all means it's historic because yesterday's close was the all-time low yield close. If you look at a week to date of 5-year notes, you can see same scenario. Here we hover at all-time low yields as long as we continue to be down on the session, and we are. Remember, 32 was the low today. That's the all-time intraday low. We have moved above that by 3 or 4 basis points, as you see. Now, 7 years, the same scenario. 7-year is at all-time closing yields because it's down on the day, and yesterday was the all-time low. Now, as we move towards the 10s, you can see a week-to-date chart. It's come up a bit from that under 60 basis points that Kelly was referring to, got down to 57. Remember, 54 is the all-time low yield close from the 9th. 31 is the intraday all-time low. Finally, let's look at some dollar index charts quickly. A 2-week of the dollar index, well, it shows us that even though we have come down a bit, hovering around 100 is not necessarily low by history standards. Open it up to a 10-year chart, and you can see what I'm talking about. Kelly? Back to you.
Okay, Rick, thanks very much. Rick Santelli. Well, it's a new month and a new quarter, but this is another sell-off following the worst first quarter ever for the Dow. Joining me with more on these markets are Barry James, the president of James Investment Research, and Rob Waldner is chief fixed income strategist at Invesco. It's great to have you both here. And Barry, I'll just start with you. I mean, if you have a long enough time horizon, you can kind of wait anything out. But in this case, how would you tactically position portfolios for what could be an extended period of weakness?
Yeah, that's a great question, Kelly. We're in a shock and awe. We had the shock, if I can stay with the wartime analogy that's been used, and now we're in the awe phase. And what we see in this type of scenario, there's three things. Like, I used to be a fighter pilot, and if you get an emergency, number one thing is keep flying the plane. So you need to keep flying the plane of your portfolios. So number one, make sure your allocation's right, make sure you're well diversified, and then just keep managing the portfolio and the names that you would have in the portfolio. And I would take two steps. First step is things that are going to hold up reasonably well within the current environment, and that's things like healthcare, some technology, some utilities, and those sorts, and then things that will also work on the other side of it so that you can stay invested throughout this period of time. There's great opportunities when the markets are down like this to do some buying, and when they're way up to do some selling, but stay with the plane. Keep flying it.
Yeah, I was going to say, if from anyone else, it would just be, a trite analogy. When you're a fighter pilot, you get to use those terms, Barry. Let me turn, Robert, to you, and on the fixed income side, ask kind of similarly. I mean, it's no more safe in fixed income right now because you either have extremely high valuations or a higher default risk than normal. So what's your advice?
Yeah, thanks, Kelly. I mean, the way we're looking at this is the fundamental problem here is an economic problem. Which is the virus and the sudden stop that we have in the U.S. economy, which is really unprecedented. But on top of that, we need to be very careful about the financial system and the financial credit facilitation across the economy, because if we don't want to have a financial crisis on top of this economic crisis, we need to make sure the policymakers are really putting through that credit through the system. I mean, I'm sure most viewers are aware of the amount of issuance that we've been getting in the credit markets. In March, we had $259 billion of investment-grade issuance. We've had tremendous outflows out of fixed income funds. In March, again, about $260 billion out of fixed income funds. All that is offset against, the fact that the Fed has been doing QE. So what we need to do, what the policymakers need to do, is ensure that they facilitate the credit in the economy to make sure that we can go through this bottoming process.
Yeah, so explain, Robert, a little bit more about what you mean by that. Are these using conventional tools or some of their new toolbox?
Well, we're looking forward to their investor-grade purchasing program really getting going. But we think they need to look in two different areas. One, they have very highly constrained the financial system now. So the banking system has a large amount of regulatory structure around it, which really keeps the banking system from flexing its balance sheet in response to credit demands like we're getting now. So one approach here would be to ease up on some of these regulatory burdens on the banking system so the banks could actually move to provide some of that credit to the system. Another approach would be for the Fed or the Treasury to be much more aggressive in buying other assets, which could also be done. We've seen that they're said they'll buy investment-grade bonds. That's going to start. And as a result, the investment-grade market has seen more support. But there are areas, including areas of the mortgage market and the structured market, that's very important to the economy where we haven't gotten support from the Fed so far.
Interesting. So you're saying they either need to ease up bank regulations so that the banks themselves do more lending or have the Fed itself kind of come in with that credit support. Barry, if you could just reflect for a second, I mean, there are so many similarities, unfortunately, between now and what happened in 08-09, even though that time it felt like there were imbalances in the economy that needed to be addressed. And this time around, I'm not so sure. Does it matter, I guess is what I'm saying, in terms of what brought us here and as it relates to how we get out of this or how you should be investing?
It is, I think, quite a bit different than 08, which was a financial crisis that just kind of consumed itself in the end. The Federal Reserve has learned from that. They have almost unlimited QE out there, and they're supporting the credit markets and the like. So I think we're not going to have that problem, and the banks aren't going to face the fact that they don't have any reserves. So that's a different piece than what we have. This is a real recession that could be incredibly deep. It might not be long, but it will be incredibly deep. And the one truth that I've always found is that things always go further than you think they should. And that will happen both to the economy, to the stock market, to the bond market. and of course to the entire United States. So some similarities. We've gotten a lot of the risk out of the market that you would normally see, but we have this whole outside factor that is totally different than what we saw in 08.
Do both of you think we need, although we've already seen programs which could equal 40% of GDP, do we need to see more? And do we worry about the sort of side effects and consequences of that, especially on the debt and deficit, or no? I mean, very quick answer, Robert, I'll give you the last word.
Well, I think what we're talking about here is really extending credit rather than outright fiscal payments. We've had this fiscal package. It's pretty substantial. I think we need to see how that washes through the economy. But we are very concerned about making sure the credit channels stay open and facilitate credit extension to finance all of this sudden stop that we have in the economy.
All right, and Barry?
I think we're starting to see it spread out. A local church just got $200,000 on the small business side. So there is money actually going out, and hopefully it will be a support for right now. And I think we just need to see how that works first.
All right, fair enough. Thank you both today. Really appreciate it. Barry James, Robert Waldner, talking to us about these markets. Well, the pain of the oil price collapse is now starting to be felt by a bunch of companies. Two formerly big players in the market, Whiting Petroleum and Hornbeck Offshore, are now filing for bankruptcy. Let's bring in Brian Sullivan. He joins us on the phone for more, Brian, on the significance of these moves today.
Yeah, Kelly, I mean, listen, I wish we could say this was expected or unexpected, rather. It's not. I mean, this is Whiting and Hornbeck. These are not major players, but they're not small either. I mean, their market caps are obviously minuscule, but they used to not be. One is an onshore company dealing most in North Dakota. The other one, as the name implies, is offshore. These are two bankruptcies. Well, Hornbeck has said it is going to file for bankruptcy. Whiting did. They've already filed. Hornbeck will. These are two of the first, and there are likely many more to come. I'm spending the day talking to bankers and lawyers and people in the oil and gas markets, and this is going to be the first of many, unfortunately.
You know, we're showing the 5-year chart of Whiting when it was trading at $150 a share, Brian. You could zoom out even more and go back to when it was trading at almost $400 a share. There we go. Back in 2014. This is a shocking decline. It may not shock us today, but if you look at what's taken place over the past 5 years, it's almost unfathomable.
Well, it breaks my heart, too, because I've been up to Williston, North Dakota many times. I mean, met some great people. I remember the first time I went up there, paid $499 for a Hampton Inn at night because so many people were going there. People were, buying a drink for $25, dropping $100 and saying, keep the change. Things are very different now. It's very tough. There's a lot of really good families I've met in my travels that are going to be deeply impacted by this. Now, I want to be clear. Whiting will continue to operate, Kelly. It's going to continue to pump. It's not like they're going away. But the reality is pay is already coming down. You've already seen Occidental cut pay. Rigs are being cut. The layoffs are coming en masse.
Well, the fact that they're going to keep pumping, is that the worst thing? Is there something to be said for this idea that these producers need to get together or decide how they can maybe constrain their supply because
they're trying.
Prices are collapsing.
We can't have an OPEC, right? I mean, that's illegal in the United States. But let's be clear. Pioneer and Parsley Energy, Pioneer and Parsley, they have petitioned Texas to basically import quotas, like start telling producers what they're able to produce. Now, will they do that? Will the state do that? I don't know, but they're asking for it, which is interesting.
Here's another question, Brian, because I don't want to be too melodramatic about these swings in the oil patch, because this is an industry that has experienced this time and again. I mean, it's almost inherent to being involved in this business. Is there something, I guess, about this time that might be actually better because of the recent experiences we've been through with these dramatic swings in crude? Maybe some lessons learned, a quicker process in terms of these, something like that that's constructive, or is this just going to be another very difficult stretch for a while?
I don't know. I mean, I talked to a guy a couple months ago, and he said, I've been through 8 busts, and the only thing I know is there'll be a 9th. It's an industry that when prices rise, people take out loans, they start to pump fuel again and pump oil. The industry in the United States is likely going to have to get smaller. Not wants to or maybe has to get smaller in order to stabilize prices, as we have said. I mean, I've talked to you about it. Like, it's not inconceivable that the price of oil goes into high single digits. In fact, coming up at Power Lunch, I'm going to do the IEA just put out a big new report, just dropped a couple minutes ago. I'm looking through it now, and some of the stuff I've seen, the headlines are pretty pretty damning for the industry, to be honest with you, Kelly.
Yeah, well, in the meantime, let's quickly mention what's going on beyond our borders, because April 1 was when Saudi, I believe, was going to start. Is it correct? They were going to start ramping up production. Is that still the case? And I know you also said we have to keep an eye on Iran and some of what's happening there.
Oh, this is really interesting. So, yeah, today is actually the day. The price war is actually starting today. Today, April 1st was when the Saudis said they're going to ramp up. Everybody's focused on the Saudis and the Russians and the United States. Got some really interesting data from tanker trackers. They basically track the movement of ships around the world. A very professional service, do a great job. They're showing huge amounts of Iranian exports going to Syria. Now, Syria normally imports about 70 to 100,000 barrels a day, not very much. Tanker trackers, and we got a picture, I believe, of some of the ships a couple weeks ago, because they're using satellite data, and then they're trying to, what they do is they follow the ships around the world. The ships have their transponders turned off, but they have to have them on when they go through the Suez Canal. So it's like a ghost ship. It goes through the Suez, starts pinging satellites again, and then goes dark again. So Tanker Tracker's done a really good job showing how Syria is buying all this Iranian oil. The bottom line is, Kelly, low prices will bring in buyers until the storage is full.
Yeah, and we're quickly getting to that point, but not there just yet. All right, Brian, thanks.
For another day.
Yeah. Well, and for another hour, and we will see you in just a bit with more. We appreciate it.
Thank you.
That's our Brian Sullivan. Let's turn to casino stocks, which are down again today and are down more than 40% so far this year as the coronavirus outbreak continues to just take a toll on this industry. Contessa Brewer is following it all for us, and she joins us now with more and a special guest. Contessa?
Hi there, Kelly. Yeah, Macau revenues have come in, and they are down 80% over last year. But that's actually an incremental improvement over February, when the government had ordered casinos there to shut down their gaming operations for 15 days. So casino companies with properties there, Las Vegas Sands, Wynn Resorts, MGM Resorts, have now seen their operations shut down in Las Vegas and nationally, along with all these other casinos. Pretty much every casino in the nation is shut down at this point. The job cuts are steep. The loss of revenue is devastating. And now, of course, President Trump has issued a guideline for social distancing that lasts until the end of April. That may keep casinos closed. Amid all of this coronavirus crisis, there has been a changing of the guard at MGM Resorts. Bill Hornbuckle, who was the COO, has taken the reins now as acting CEO. He joins me now on CNBC for an exclusive first interview. Bill, thank you so much for making time for us today.
Good morning, Contessa. Thank you.
Tell me why you're taking over now when there is so much crisis swirling around you.
Well, look, Jim Murin had announced earlier that he was retiring and that he was going to move on to doing something different. When this began to really hit and became a real challenge, not only for us in Macau, but ultimately here in Nevada and throughout the other 8 jurisdictions we're in, I had been leading the charge, if you will, as the former COO of the company, in pushing forward how we would get our head around, first trying to keep this a safe environment that customers and employees would want to come into and work at, and ultimately push this through what became now a closure of all of our facilities, with the exception of Macau. Challenging times, but I was in the midst of it to begin with, and we just thought it was the appropriate moment to take it over.
Can you talk to me a little bit about the furloughs, the layoffs? How many people have you had to lay off? And what do your day-to-day expenses look like, even though revenues have plummeted?
Sure. It's been devastating. We have about 82,000 employees worldwide. As you know, Macau is back open again. We have about 12 or 13,000 between our two properties there. But of the 69,000 remaining, we've furloughed about 60,000 employees. When we came to the decision, and it was a quick decision led by our board to ultimately close on the 16th, we quickly closed our casinos the following Monday evening. We closed all our properties within 48 hours. And by the following Friday, and I am proud of the way the troops handled this, it speaks to our 2020 programming, we had laid off and furloughed over 60,000 employees. Concerned for them, very. We've hopefully set up programs and benefits that protect them into the immediate future. And I think the long-term view, and we have taken a long-term view on all of this, is good for the company. We had the good fortune if you call it fortunate at this point, but at the end of the year, we sold off $8 billion worth of our assets. We retired about $4 billion in debt, but we have about $4 billion right now of liquidity to push us through this and have the good fortune of think long term.
And you will still have rent payments. Are you still feeling good about this, what they call opco, propco, that you'll be an operating company and releasing the property that you used to own and letting that add to your balance sheet?
Yeah, absolutely. We're protected well into next year, both in Macau and here. Of note, Nevada and, of course, all of our other jurisdictions. So we're in as good a shape as one can be. Frankly, much better shape than we would have been 6 months ago had this happened to us. And so we feel secure in knowing that we have the opportunity to play safe, to play the long game, and ultimately protect all of these jobs, not only here, but throughout the other states.
What are you learning from reopening in Macau about what the ramp might look like? What it will take for business to resume?
It's a little different there because obviously Macau is an island. What we learned about closure here is that they were decisive, they were quick. We closed the properties there literally within 48 hours as well. And it went a long way in protecting the safety of that environment, the citizens, and ultimately our employees there. Same thing in reverse. We were able to ramp up. Property has good days. It's still ultimately leaking cash. Yesterday, by way of example, we made an operating profit, which is one of a couple we've seen over the last several weeks. But until the IVS system, the visa system, opens up the borders, that market will suffer. But we do believe through the summer we'll see it regroup, regain some steam, and ultimately return to ultimately where we were, a year ago when this all first started, 6 months ago when this all first started.
And how will you know it's time to reopen in the United States?
When it's safe. The governor here is just about to announce April 30th will be push out, so we're not going to open here anywhere between now and then. Really, though, when it's safe. We were quick to do this in terms of shutdown, and we will take the same lens, if you will, as we look at opening. We want to make sure for our employees, first and foremost, and ultimately for our customers, it's a place people can come to and enjoy and relax. Look, corporate America has checked out for a while. A good piece of our business here in Southern Nevada is tied to corporate business and group business. That has pushed itself into the third and most notably the fourth quarter, as well as some of the major events that we host. But, we're going to take this literally 1 day, 1 week, and 1 month at a time. We won't necessarily want to be the first to open. We'll open this intelligently and hopefully with some forethought.
Listen, Bill, this is an amazing time to take over the reins of a company like MGM, and it really is an opportunity for you to show leadership. We wish you the best of luck going forward, and we really appreciate that you've given us the first interview.
I appreciate it, Contessa. Have a great day. Thank you.
All right, and Contessa, our thanks to you as well for that, Contessa Brewer. Coming up, the U.S. now has more than 1 million tests for coronavirus, but hospitals and states say it's not nearly enough. We're going to look at where testing stands and one biotech investor's bold idea to fix this problem. Plus, millions of small businesses are expected to tap the coronavirus rescue loan program when it launches on Friday. Everything you need to know about that is straight ahead. And a reminder, you can always watch or listen to us live on the go on the CNBC app. We're back in 2.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
It's TuneIn Sports on this day. April 1st, 1991, Duke beats Kansas to win their first men's basketball title. Power forward Christian Laettner was named the most outstanding player.
Sees Davis, Woodbury intercepts. Final seconds. Jordan got the jumper. It doesn't matter. Duke has won its first national championship.
To listen to conversations breaking down the moments just like this, search sports to be part of the discussion on TuneIn.
Not all heroes wear capes, but most wear tights.
And here we go. Now it's underway. Cover on Rowan. Wait seconds.
Keep up with everything happening in the wild world of pro wrestling with the TuneIn podcast. For expert analysis of the latest WrestleMania, turn on the WWE podcast. Or listen to the Steve Austin Show for no-holds-barred conversations with wrestling's biggest personalities.
It's good to be here tonight. It's an empty building. But
For these and more, search sports and scroll down to the world of wrestling.
Welcome back. Stocks about 100 points off the lows, but a pretty grim day across the board with the Dow down 800 points. That's just hanging on to the 21,100 level, a 3.7% decline, nearly 4% for all the major averages today. The Russell's 2,000 small caps, unfortunately, looking a heck of a lot worse than that, too. The president warning of a very, very painful 2 weeks ahead as coronavirus cases and death numbers continue to climb. Let's get out to Rahel Solomon, who has the very latest for us at this hour. Rahel?
Hi, Kelly. So let's start with New York. Governor Andrew Cuomo now saying that the state will now see the worst of the pandemic not until the end of April. Cuomo also closing New York City playgrounds to try to improve social distancing. He says that New Yorkers must follow the outbreak restrictions so that the worst case scenarios don't come to pass.
Our course for planning purposes is a moderate model because in truth, the higher models, we don't even have a chance at meeting that capacity anyway. You say over 110,000 beds. There is no possible way we could get there.
Maryland is expanding its coronavirus testing with 3 drive-through sites set up at motor vehicle testing locations. They're meant for people who have approval from their doctors or who are symptomatic. And NBC News just now reporting that Florida's governor will be issuing a stay-at-home order for all Floridians except for essential activity that starts at midnight tomorrow. Of course, as always, for more coronavirus coverage, you can head to our website, cnbc.com. But, Kelly, as you know, that Florida news, pretty big news because the state was getting quite a bit of heat for not issuing that order sooner.
That's huge. Rahel, thank you very much for bringing that to us. Rahel Solomon. And we watch the markets. Dow's down 840 points. Can't hurt at this point. I guess better late than never. From not enough tests to the questions about accuracy and long wait times to get results, and then questions about the veracity. The race to improve COVID-19 testing does continue. Meg Terrell is here with more, and she also has a special guest for us today. Meg?
Hey, Kelly, well, more than 1 million Americans have now been tested for the coronavirus. We hit that milestone this week, and it's a majority done by commercial labs. More than 800,000 of these tests have been performed by companies like Quest and LabCorp. You can see here when testing just started to ramp up, finally surpassing that 1 million test mark. But there are still bottlenecks, and not everybody who wants a test can get one. And the CDC is guiding to prioritizing to people in the hospital and healthcare workers and first responders with symptoms. Some of the reasons for those backlogs: shortages of supplies to run the tests and protective equipment needed to protect the people taking the samples. A backlog that was generated at the beginning of all of this that the labs just couldn't keep up with the demand. A logistics slowdown because there are fewer flights going around the country carrying these samples to the labs to be processed. And also Debbie Burke saying last night more recently approved tests aren't being used. People are sticking with the ones that they started with, and that's causing backlogs too. And Kelly, you're seeing a variability of testing across the country, state by state, on a per capita basis. This great chart made by our Nick Wells shows states like New York, Washington, Louisiana testing the most on a per capita basis, but states like Texas, South Carolina, and California way behind. And in fact, California has a major bottleneck, reporting 57,000 pending tests. So to join us to discuss all of these issues and how they could potentially be improved is Dr. Mike Polini. He is a managing partner with Section 32, a venture capital firm. He's a diagnostics expert, a doctor. Dr. Polini, thanks for being here. You know, what explains the problems with our testing capacity? You've been on this for weeks trying to figure this out. What have you learned?
Meg, first of all, I just want to thank you for inviting me on to speak. I certainly wish it was under better circumstances, but I can't imagine a more important topic to discuss right now. I think one of the fundamental changes that we're facing as a nation is that we have absolutely undervalued diagnostics, not just in the past 3 months, but certainly over the course of the past couple of years. So diagnostic testing is the foundation of everything if we are going to move forward. So in terms of saving the healthcare system, in terms of our economic recovery, in terms of our emotional recovery, and it's just an area we haven't placed much value on. I've seen some positive signs, right? We see the labs, the national labs are starting to scale up. The diagnostic manufacturers, both large and small, are pushing forward. But we have to continue to press hard. We need a comprehensive national strategy here, both for COVID, but also for diagnostic testing itself.
Now, you have an idea, a proposal for how we can be better using the data from these tests on a national level. Tell us about that plan and why we don't have an ability to use this data already to guide our response.
Yeah, I mean, there's statute that makes it very difficult, but I'll tell you, one of the things that this administration has done an outstanding job of is rewriting our rule book. So let's take advantage of it. Let's assume that the rules to this point in time don't matter anymore. Let's start from scratch. And we can do that. We can do that to fix diagnostic testing for the immediate term with just getting the test, making the test available, for the midterm, which is where we need surveillance testing by the fall, and then for the long term, which is an overhaul of the diagnostic system to make sure this never happens again. But what's going to take a comprehensive strategy, and as part of that strategy, every single test that is run needs to be uploaded into a national database. And so then you say, well, how does one do that? Well, we know we can build a national database, but how do we incentivize providers who are running these tests to do so? It's actually straightforward, and this is where the roadblock has been in the past. Let's pull the government payers and the private payers together. Let's agree to payment for these tests, whether they're performed in the home or in the national labs or somewhere in between. But before payment is made, let's make sure that each test result is uploaded to a national database. Because that national database, if made available to academic, government, and industry researchers, can have dramatic effects. It's going to help us refine and improve our testing going forward. It's going to help with national surveillance, which is going to be critical to help us get out of this economic downturn, and also potentially with the recurrence of COVID in the fall. It's going to help with our drug and vaccine discovery and development. Yeah. Frankly, it's just going to help us make informed decisions based on data. We have to stop guessing.
In that sense, Doctor, it's Kelly here back in the studio. I just want to ask you, how many tests, roughly speaking, do you think this country needs to conduct to really get our arms around coronavirus? So ballpark, how many tests? And then how many times do you think people might have to take this test, including both to figure out if they do have it, which might take a few times, and then once they're clear of it?
It's a great question. And so I think we've seen numbers put out there over the course of the past couple of days where we might need 1 million tests per week.
Wow.
I would encourage everyone to think about it differently. What we truly need is an ability to test up to 330 million Americans. And let's do the math. Let's do the math very quickly. Even if each test costs $100, we have just spent $2 trillion on a package to help the economy. I think we can all agree we are going to be doing that multiple times over in the coming months and the coming quarters. If every single individual in this country had access to 1, 2, or 3 tests, that's $100 billion that we might spend over the course of this year to right the ship, and that ship is the United States.
Absolutely.
We need tests, and there are certainly strong economic incentives for us to get this right.
And you're right, we absolutely could have the money for it. Can we get the actual tests? How bad is the bottleneck? I've read studies today that suggest a lot of these tests, Doctor, are even themselves coming from China. Can we ramp up testing here in this country quickly, or are we going to continue to have a constraint?
Well, I'm not convinced that the constraint is in the tests themselves. I'm most convinced that the constraint is just in the system, the logistics around the system. But let's be very clear. It's going to take continued pressing from the diagnostic manufacturers, including Roche, including Abbott, and including Thermo Fisher. I actually think they've been doing a really nice job. We'll have to figure out how to get the national labs to continue to scale up their offerings so we no longer have bottlenecks. But I know Quest and LabCorp have been pushing. It's also going to take the local hospitals. I'm just told that there are over 80 hospitals now. Perhaps I would guess it's even higher than that, offering testing at the local level. And it's going to take home tests, simple tests that can be run in the home. When we put all four of these things together, we can certainly have the capacity to run the appropriate number of tests in the not too distant future. It just takes a concerted effort.
Fascinating.
Dr. Polini, thank you so much for being with us. I agree, Kelly, it is fascinating. Yeah. And we'd love to have you back. Kelly, back over to you.
Meg, really terrific stuff. You're reporting the guests that you've brought us and everything you're doing on this story. We greatly appreciate it. That's our Meg Terrell. Well, it's a new quarter, a new month, and time to pay the rent for millions of Americans. But for many of them, they're simply not going to have the cash this time. How are the landlords handling this new reality? Robert Frank will be here with those details. And from rents to mortgage payments, the servicing companies are being flooded with help me out calls. How is that industry going to deal with the deluge? Our special breaking news coverage. We'll be right back.
People aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen. Not all heroes wear capes, but most wear tights.
And here we go. Now it's underway. Cover on Rowan. Wait a second.
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis of the latest WrestleMania, turn on the WWE podcast. Or listen to the Steve Austin Show for no-holds-barred conversations with wrestling's biggest personalities.
It's good to be here tonight. It's an empty building. But
For these and more, search sports and scroll down to the world of wrestling.
I created Gabi because most people overpay on car insurance. Gabi is a free tool that saves you money by finding the best deal. Gabi users save more than $800 per year on average. Go to Gabi.com and stop overpaying for car insurance.
This is Chime, a mobile bank account and debit card with no hidden fees, no overdraft or monthly maintenance fees. And I can even get my paycheck up to 2 days early with direct deposit.
Start banking with Chime today at Chime.com.
The loan is killing us.
So what's your ask? $110,000.
$285.
$2 million.
Could I bail them out? Yes.
You have helped me save this.
It's spectacular.
The Deep Chicago. All new tonight, 10 Eastern. CNBC. Get yours.
Welcome back. We're just slightly off the lows of the session. The Dow is down 4% right now. The S&P 4.2%. The Nasdaq a little less than that. And earlier I mentioned the Russell 2000s, which are down 6 2/3%, 6.7% or so. All 11 sectors in the S&P are lower. Real estate, utilities, and financials, the worst performers. Financials and energy are weighing big time on the small caps today as well. As I said, the real estate sector is down nearly 8%. Well, the country is trying to deal with this unprecedented crisis, which is wreaking havoc on the housing and renting markets. Diane Olick is looking at the surge in mortgage forbearance requests nationwide, while New York is bracing itself for 40% of tenants possibly not paying rent this month. Robert Frank has that angle. Diana, let's start with you and the kind of volume we're seeing for these forbearance requests.
Well, Kelly, the calls are pouring in. The CEO of Caliber Home Loans, which services 750,000 government-backed loans, had over 8,000 calls on Sunday alone. The government forbearance program allows borrowers to miss up to a year's worth of mortgage payments. Those payments are then tacked on to the end of the loan, so it's not a freebie. Now, I spoke with the regulator for Fannie Mae and Freddie Mac, and he had a stunning prediction of the number of borrowers who could need help.
April looks like it'll be approximately 300,000 loans for Fannie and Freddie. For the overall market, that would translate approximately into 700,000 loans. We are thinking that closer to May, we'll see that for Fannie and Freddie's book closer to 1 million. So probably by May, a little more than 2 million.
Now, that's just 2 months, though. The numbers will likely go much higher the longer it takes for the economy to reopen and for people to get their jobs back. There has been criticism of the forbearance program because it doesn't require borrowers to prove any hardship. Calabria admitted they are working right now, quote, on the honor system. Kelly, back to you.
Diane, I just appreciate you standing in front of that tree. I mean, that is a beauty. Is that a cherry tree?
Cherry blossom, a weeping cherry blossom.
It is lovely, and we needed that. A little break from the grim news this hour. Diana, thanks very much. Diana Olick. Let's turn over to Robert Frank, where, Robert, we are facing this pressing situation in New York where, according to reports starting today, 40% of people might not be able to make their rent.
That's right, Kelly. 2/3 of New Yorkers are renters. That works out to be over 5 million New Yorkers. And if you extrapolate the math, that's $20 billion in rental payments due today. Many of those, up to perhaps 40%, will not be paid. Now, as Diana just mentioned, homeowners and landlords, they have received some forbearance for mortgages, but renters are still legally required to pay their rent. That's created a cancel the rent movement online and in the streets. Protesters in New York and California calling for a rent strike. There's a digital protest, starts at 2 o'clock today. Now, many are hoping for this bill that's making its way through Albany that would allow New York to cancel their rent for 3 months. Now, the bill would also provide some relief for landlords through mortgage freezes, but the domino effects here, Kelly, are huge, not just for the banks and the mortgage holders, but also the city of New York, which gets 1/3 of its revenue from property taxes funded in large part by those rents, not to mention all the building staff, the vendors, this vast economy built around New York real estate that relies on that $20 billion a month in rent. Now, Governor Cuomo has answered this by calling for a moratorium on evictions, but many housing advocates and lawmakers say that's just going to lead to a wave of evictions in July when this is all over. So therefore, you have to have some kind of legal protection for people not to pay their rent, at least for 3 months. Kelly?
It's going to be such a mess. Like you said, hopefully help on the way. And a digital protest is another one of those signs of the times. Robert, thanks so much. Robert Frank. Up next, some bullish calls on your phone, your bank, and your coronavirus comfort food, pizza. We'll tell you all about those today. Plus, now that Congress has passed the Relief Act, it's time for small businesses to figure out how this all really works. After the break, our Kate Rogers will walk us through the process for getting Main Street all of these loans, and they'll be forgiven, remember, in some circumstances. We'll be right back.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow at TuneIn and always be in the know.
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Not all heroes wear capes, but most wear tights.
And here we go. Now it's underway. Cover on Rowan. Wait a second.
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis of the latest WrestleMania, turn on the WWE podcast. Or listen to the Steve Austin Show for no-holds-barred conversations with wrestling's biggest personalities.
It's good to be here tonight. It's an empty building. But
For these and more, search sports and scroll down to the world of wrestling.
Pillow you can possibly get.
Order your Angel Sleeper now at angelsleeper.com for only $39.99 or call 1-800-373-1178. Angel Sleeper is also available in king size.
I love the king size. You just have more of a great pillow to go around. It's awesome.
We guarantee you will sleep all night and feel more energized all day.
You have to get an Angel Sleeper. Don't let another night pass by without one.
The new Angel Sleeper from Copperfit.
Welcome back. Let's get to some of the big calls of the day here. Goldman Sachs added Verizon to its conviction buy list. That was one Barry James liked at the top of the hour as well. Goldman did lower their price target by $6 to 61. Verizon's around 53 today. Goldman's saying they think the stock offers the most attractive combination of total return and risk. They cite three key reasons for this: stable earnings per share, an attractive 4.5% dividend yield that's well covered, and a strong balance sheet. Verizon down just about 1% today. Meanwhile, KBW upgrading JP Morgan to outperform while lowering its price target to 120 from 142, saying JP Morgan is well positioned to withstand a recessionary environment and to come out of it in a better position than peers because of its balance sheet. They added that investors can justify owning the stock at current valuations because it's a high-quality franchise. JPM is down 6% today in what has been a pretty tough session for financials. And finally, MKM upgrading Papa John's PCZA to a buy with a $64 price target. They say the pizza segment appears better positioned than other restaurants because of digital and its delivery infrastructure. Their reasons for the upgrade include clear evidence of same-store sales momentum, market share gains in the first quarter, its first in 5 years, and management that can further support its franchisees. The company did pull its guidance yesterday. Still, Papa John's up nearly 5% today on the back of that bullish call. Residents of Pennsylvania have now been placed under a statewide stay-at-home order. This right after Florida issued theirs finally, and this just before the new $350 billion small biz coronavirus loan program launches. The launch is tomorrow, and millions are expected to apply. Treasury Secretary Steve Mnuchin was on CNBC earlier today with this message to small businesses.
I very much want people to sign up for this. It's a great way to hire people back or make sure you're getting paid if you have people at work, and this will cover about 50% of the payroll of the private enterprises.
Yep. All right, so how does the program work? For more, let's bring in our own Kate Rogers. Kate?
Hey, Kelly. Well, those loans will be available beginning Friday, and senior administration officials say that the capital may be available to small businesses as early as same day. So here's how it will work. The Small Business Administration is currently working on a portal where small business owners can find lenders that are in their area by entering their zip code. That's if they don't already have a banking relationship in existence. Then they can apply online through that bank. Right now, some 1,800 lenders are a part of the program, but any FDIC-insured institution is eligible to register with the SBA, and the administration expects that a lot of them are going to participate. Loans will have a 0.5% interest rate. Payments can be deferred for up to 6 months, and loan forgiveness, as we've talked about, is available if employees are retained or rehired, and the loan is used for certain expenses like payroll and rent or utilities. The loans are 100% backed by the SBA, and they will be administered by the banks. They're also going to be available on a first-come, first-served basis, which is really important. Demand also is going to be really high, and a lot of questions do remain about how this demand will be met. Another important point, one that Treasury Secretary Stephen Mnuchin made again on our air today, if the $350 billion is used up, he does plan to head back to Congress to ask for more funding from Main Street. Not sure how much he's planning to ask for. We're sure the money will go quickly, and we certainly will be monitoring it in real time on Friday. Kelly, back over to you.
Yeah, a lot of questions about, how well they can get this, website and the digital infrastructure all up and running. And in terms of the people who can apply, Kate, what are the cutoffs? And I think you mentioned this before, that it does apply to independent contractors. How big a business can you be until they say, hey, sorry, these aren't for you?
So the loans that will be available beginning Friday are for small businesses with 500 employees or fewer. Independent contractors and sole proprietors will be able to apply in another week later on April 10th. And we have heard some concern from some of the small business advocacy groups on how much capital will be left once they're able to apply. You know, how big of a run to the banks will we see on Friday? As we heard from senior officials yesterday, they really do expect volume to be very high. A lot of businesses are hurting and will surely be applying for these loans. What will be left for the independent contractors and the sole proprietors all remains to be seen. One other major point here, the Consumer Bankers Association says, typically this is a $20 billion annual program, the SBA 7A program. They're looking to ramp this up to nearly $350 billion in just a few weeks, Kelly. So this is going to be a massive undertaking in many, many ways.
And that's a great point about whether there's going to be enough even next week. Interesting. And then they'd have to maybe go back to Congress that. All right, sort of some narratives to watch. By the way, last thing, are they going to tell us, Kate, when this money, are we going to get kind of like a daily or a weekly update in terms of how much has been dispersed?
I hope so. We're in frequent contact with the SBA, and I'm assuming they're going to want to let people know, how quickly this cash is getting into the hands of small businesses. But the banks are going to have the delegated authority to actually make the loans. The SBA will make sure that your business hasn't already applied for a loan with your tax ID number, but really it's in the hands of the banks to get this out to you as quickly as possible.
Yeah, and I hope they can get the data to us. That would be helpful. Kate, thanks so much. We appreciate it. Kate Rogers. Coming up, a new month, a new quarter, but still the same volatile markets. We're going to look at some dividend darlings that can provide you with some income as this continues. Here's a look at some of the names that are outperforming today. Kroger, Clorox back on top of the list, and Dollar General too. We'll be right back.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know. It's TuneIn Sports on this day, March 27th, 1988. The Chicago Bulls and Atlanta Hawks match up in the Georgia Dome in Atlanta. Now, it draws a crowd of 62,046, the largest in any game in the NBA history. And the Bulls win 89-74.
Well, there's no question the spotlight today will focus on Dominique. Given what happened last week, I would think there's some incentive for Dominique.
To listen to conversations breaking down the moments just like this, click on Sports to be part of the discussion on TuneIn.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Not all heroes wear capes, but most wear tights.
And here we go. Now it's underway. Cover on Rowan. 20 seconds.
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis of the latest WrestleMania, turn on the WWE podcast. Or listen to the Steve Austin Show for no-holds-barred conversations with wrestling's biggest personalities.
It's good to be here tonight. It's an empty building.
For these and more, search sports and scroll down to the world of wrestling.
Actual rates from multiple lenders. We could save you hundreds of dollars a month by refinancing to a lower rate. Don't get ripped off on your student loans. Let's focus on your future, not your debt.
Visit Credible.com and in 3 minutes, see how much you could save.
My favorite thing about banking with Chime is getting my paycheck up to 2 days early, which is really cool because I walk into the office and I'm already boasting that I got paid. My name is Dulce and I love banking with Chime.
Get paid up to 2 days early. Chime.com.
Welcome back. Major pressure on the cruise lines again today. Carnival's down 18%, and it also increased the size of its bond offering this morning with a 13% coupon to get those investors. Seema Modi has more for us. Seema?
Kelly, that's right. Both credit rating agencies, Moody's and S&P, downgrading Carnival's credit rating today to one notch above junk level status. This as the largest cruise line operator, Carnival, is going to the bond market with this $3 to $4 billion bond offering, a coupon that I'm being told is being 12 to 13%, which trades right in line with some of the other high yield junk credit that is currently on the market. It comes as the cruise industry has suspended sailings till mid-May, in some cases cruises till the end of the year, depending on what line. At the same time, we're watching these two Holland America cruise ships, Kelly, headed towards Florida. Unclear whether they will get entry or access to the ports in Florida. Yesterday, President Trump referencing those two ships and that he will be having a conversation with the governor of Florida to get those ships access to those ports so those passengers can disembark. But certainly a lot of pressure when you look at shares of Carnival, now down as much as 18%, trading at the lows of the day, and a year-to-date chart will show you it's down 80%. Kelly.
Yep, under $11 a share. All right, Seema, thank you. Seema Modi with the latest there. Now, as the hunt for yield continues, I mean, you could get 13% from Carnival. Investors are looking for where they can get the best and safest returns on their money. Here with some ideas about that is Dan Genter. He's CEO and Chief Investment Officer of RNC Genter Capital Management. Dan, I imagine you're not participating in the Carnival bond offering.
We're not participating in the Carnival bond offering. I think, one of the things that's going to happen with Carnival is, since it's not a U.S. entity, with the new package and the CARE package, it's focused on primarily companies that are domiciled here or have most of their business here. All their ships are offshore, so they're really not going to get any help. They're going to weather this on their own. I mean, we think that there are better opportunities that are certainly going to get financial aid and ones that are going to survive on their own, frankly.
What are some examples of those?
Well, I think you have to go to the three areas that are really going to lead us out of this. And it's going to be tech, it's going to be healthcare, and it's going to be financials. I mean, we've all seen that we've underinvested in infrastructure. We were just not prepared as we try to go to this new abnormal, if you will, to have 100% of our workforce working from home. And so we're going to have to expand. Companies like Broadcom are certainly going to be a major part of that. They're getting 5.2% in dividends while you wait. Those dividends are only taxed at 20%. Cisco is going to be the major king of networking, and we're getting 3.5% while we wait on Cisco. Corning, that's going to be providing more fiber optics and more infrastructure. The same as you go on the healthcare side. The healthcare, which has been our red-headed stepchild for many, many years, still may have red hair, but it's going to come through this with a white hat on. And companies like Gilead are going to lead the way. Strong dividend there also. Amgen, AbbVie has a 6.1% dividend. I mean, these are going to be, certainly we've, reinvigorated that industry and seen, the benefit that they have to mankind.
So you've mentioned tech and healthcare, which don't take too much persuading. But what about the banks, especially today when the financials are trading so poorly again?
Well, I think the financials clearly are really getting hit. One of the things that happened overnight is you're seeing a lot of news that's coming out about the European banks that are cutting their dividend. And we're worried if that contagion, goes into our own banks. But we're dealing with a totally different situation. I mean, we have a $2 trillion bailout that can be rapidly expanded. Our banks are getting a lot of help. The Fed has just totally opened the spigot to do whatever it needs to do, even more than we saw in 2008. And I think one of the things that, frankly, we're missing about the banks is, you're not only getting these extraordinarily high yields, like you're seeing with J.P. Morgan, with Citi, 4.5%, even a super regional like Truist. But they're going to actually be very active during this time period. I mean, they're going to provide the financing, and as your prior segment just said, they're going to administer these SBA loans. I mean, there's going to be millions of applications, and the only way to do it is through a local network of banks that already have relationships. So they're going to make money here.
Yeah, they want to be part of the solution, not part of the problem. Do you think that Wells Fargo 7.5% dividend is safe? Real quickly, Dan?
Yeah, I do. I think they'll backstop it. I think there's a lot of places they can go. I mean, what we have to realize is the banking industry has been stressed, tested, and over-stress tested, and they're in solid ground.
All right, Dan Genter. Great ideas, sir. Thank you so much.
Thank you.
We appreciate it. When our breaking news coverage returns, airline stocks getting hit hard today as new numbers show the skies are virtually empty. How long will flyers be grounded? And what does the industry look like when the coronavirus curve flattens? Plus, checking the market with over 2 hours left in the first trading day of the second quarter. 760-point drop for the Dow, or about 100 off the lows. Still, the Russell 2000's down 6%, having a tough day. We'll be right back.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn on the App Store today.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Not all heroes wear capes, but most wear tights.
And here we go. Now it's underway. Cover on Rowan. 20 seconds.
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis of the latest WrestleMania, turn on the WWE podcast. Or listen to the Steve Austin Show for no-holds-barred conversations with wrestling's biggest personalities.
It's good to be here tonight. It's an empty building. But
For these and more, search sports and scroll down to the world of wrestling.
CEO of CrowdStrike, a leading cybersecurity company. Organizations have told us how frustrated they are with their ineffective security. At CrowdStrike, we built a security platform powered by artificial intelligence and delivered from the cloud, protecting computers against data theft and ransomware. It's fast, easy to manage, and it actually works.
Having a company like CrowdStrike, knowing that we're protected, I don't need to be a cybersecurity expert.
CrowdStrike. We stop breaches. Try it free today.
As the crisis evolves, from New York to London and around the world, the stories that matter to your health, your job, your 401k. Stay connected, stay informed with CNBC. Watch and listen live on the CNBC app.
And good afternoon, everyone, and welcome back to our breaking news coverage of the coronavirus pandemic and the big market sell-off that we are experiencing at this hour. Welcome, everyone, again. I'm Tyler Matheson. The Dow near the lows of the day, down about 800 points right now to kick off this second quarter. This, of course, after the Dow and the S&P 500 both had their worst first quarter ever. The worst first ever, as fears about the impact of the virus spread gloom and doom about the market and the economy. We begin with breaking news. The Boston Fed President, Eric Rosengren, speaking right now, and Steve Leisman has those details. Hi, Steve.
Good afternoon, Tyler. Eric Rosengren, the Boston Fed President, speaking in Boston over some form of a teleconference, says he expects the rate of unemployment to rise dramatically. He also says that central banks can and must do a lot in crises. For the record, Rosengren was very early in saying the Federal Reserve may have to go out and do things it had never done before, and indeed is doing right now with the Boston Fed itself running a special fund to back up money markets. He says that regulatory changes will allow restructured loans, specifically those restructured loans from the banks, can be brought to the Federal Reserve and be funded that way and won't be frowned upon by supervisors. So kind of a encouragement from the bank supervisors to get to the to work with their customers and restructure loans. Finally, says it's the need to support essential workers, and it's the best of times here for let the public show public spirit here. Let me just talk about this rising unemployment rising dramatically. Only looking for a 0.2 of an increase in the Friday jobs report, but that's not going to pick up what we're seeing in the more frequent data, which is the unemployment claims. We had north of 3 million claims last week. Expectation for tomorrow is north of 3 million as well. Both of those together would raise the unemployment rate quite a bit by itself. So we're looking beyond the data, Tyler and Kelly, because it's not necessarily going to pick up this monthly data, going to pick up what's really happening in the economy. I've seen estimates today from Oxford Economics that as many as 20 million people could be unemployed in April. That compares to 15 million at the height of the 2009 crisis, guys.
And to further illustrate that, Steve, Bank of America thinks the jobless claims figure this week, remember, it was already 3.3 million last week, will be 5.5 million. So, I mean, this is, that's a pretty staggering increase.
I've seen estimates as high as that. I hadn't seen the B of A one, so thanks for that. I will say that some people are saying they may have to go back and revise last week. Look, during the financial crisis in 2009, we never had as many on the continuing claims as 7 million, and that took about 20 months to get there. We're going to get there in like a week or 2 weeks of time. So one of the things that's going to keep that number down, I believe, is that the state offices just can't process it. So they may be going back and revising data for quite a while. And the story here, Kelly, is that the initial phase of unemployment, the initial downturn in the economy, it's not going to show up in the official data. It's going to take the official data a time to catch up, and then hopefully the rebound will outpace the official data as well. So that's why we're looking, and we've been talking on this show quite a bit about alternative data, ways of measuring the economy in real time in a better way.
Steve, one quick question. Where does Rosengren fall in the spectrum of Fed presidents?
Well, he was hawkish for a bit there. He wanted the Fed to go a little bit easier last year in terms of reducing rates. He was very concerned about the corporate debt market. And by the way, that's proving to be a sort of prescient warning. If we had gone into this crisis here with less leverage and less corporate debt, we might be in a better place, or the Fed might have had to do less. He was very concerned about low rates increasing the level of corporate debt that's out there. Once it turned, and once the Fed got down to zero, Rosengren is a full-out dove here.
I was trying to, do I coup? I mean, a full-out, you said it, Steve. I think everybody, is anybody not on board with this at the Fed at this point?
No, there was one person, we had a Loretta Mester on yesterday. She initially didn't want to lower down to zero because she felt the transmission mechanism was gummed up and it wouldn't do good. She wanted to save that. But nobody from the Fed, in fact, Kelly, you remember the 08-09 crisis. There was a lot of debate and hand-wringing about the Fed going too far, a lot of political, a lot of ideological, economic debate. Everybody's on board with this. Everybody, I guess you could say, is a Keynesian or even, dare I say, an MMTer, in that nobody seems concerned about deficit at this point. The extent of the political consensus about doing a lot now, the only thing I worry about with this latest bill is, will we have the firepower to do more later? It's possible that if this were to go on, that we're going to need another round of stimulus here.
That's quite a way to set us up to talk to Mr. Santelli. Steve, thanks so much. Steve Leisman. Rick, I mean, we've talked about the differences this time, and you've said it yourself. You've got no problem with this because it's, last time around you had the housing bubble. It felt like, why would we try to get back on that path? This time it's a pandemic, right? It's different.
It is different, but yet I'm not sure that everybody has the differences really outlined clearly. First of all, if you have a baseball team and you take all their bats away, what happens to their batting average, Kelly? Pretty much goes to zero. I think this parlor game of initial jobless claims and 30% unemployment is absolutely useless and ridiculous. And I think this everybody conventional wisdom that we're going to shut down quick because we've turned off the economy, but we're not necessarily going to come back quick, I don't believe that either. And I'm certainly no Keynesian, and I don't believe in modern monetary policy or any of the new wave, forget the deficit. To me, the biggest issue I compare potentially what we're going through to 08, 09 is on the backside, okay? Because I think on the backside, they need to mop this up a little bit quicker than Ben Bernanke and Janet Yellen did on the 07, 08 crisis. But I don't have a problem with Mr. Rosengren. I don't have a problem with moving rates to where they move them. And I certainly don't have a problem with some of the regulatory issues or the repo liquidity or the dollar swap programs or the commercial paper programs. I think all those are great. But I really think that a 30% unemployment rate is absolutely meaningless because it isn't coming from weakness within business. It's coming from a shutdown from the outside.
Absolutely true, Rick. It's a self-inflicted shutdown. Rick Santelli, thanks very much. And for more now on what we can only describe as the kind of ugly action on Wall Street, at least as far as equities are concerned, as we kick off the second quarter, let's go to Bob Pisani. Hi, Bob.
Hello there. And Rosengren didn't have a big impact on the markets, but we've had a nice little mini rally going ever since Governor Cuomo stopped talking, essentially. Rather grim commentary from him. 2466 was our low just after lunchtime, 2489 right now on the S&P 500. So we've got a little bit of rally going in the middle of the day. The Fed, Mr. Rosengren was talking about buying mortgage-backed securities. They could certainly use it in the REIT space. They're just getting clobbered again. Office REITs like Brandywine are down big. The shopping malls like Simon, the usual suspects, the Tanger, they're all getting hit rather notably. So big drops in the REITs today. The regional banks, same situation with them here. They're going to be stuck with non-payment of mortgages, and those things have not performed even on days when the market is rallying. Banks generally are not. And you can see PNC, KeyCorp, regional Synovus, all moving to the downside. Retailers are hitting new lows as well. Macy's is getting kicked out of the S&P into the small cap index, $2 billion, below $2 billion market cap. And Hanes brand, Nordstrom Gap, they're essentially $2 billion market cap. I think you're going to see other companies kicked out into small cap spaces now that these numbers are down. Finally, the one company, people ask me, what's the company best reflects the way the market's performing? I think it's Coca-Cola. It tracks the market better than just about anything else and it's got a good exposure to the overall global economy as well as the U.S. consumer economy. And that's the Coke versus the S&P year to date. It's pretty darn good, almost tick by tick. Guys, back to you.
All right, Bob, thank you, sir. Bob Bassani. We've got some breaking news. The biggest energy CEOs are headed to the White House. Let's bring in Brian Sullivan, who has more for us. Brian?
Yeah, thank you very much, Kelly. This is all breaking right now, and sources telling me that on Friday, in person, I might add, CEOs from at least 7 companies will be a meeting with the president at the White House to discuss energy policy. Source tells me they are not looking for a bailout of any kind. They want markets to work. But the CEOs that we have learned here at CNBC who will be attending at the White House, and again, in person, include the CEOs from pretty much all the big names: ExxonMobil, Chevron, Occidental, Devon Energy, Phillips 66, Enterprise Transfer Partners, a pipeline company run by Kelsey Warren, probably the richest man in Texas, if not number 2, and also the former CEO of Continental Resources, Harold Hamm. So 7 at least CEOs will be going to the White House on Friday, Kelly and Tyler, in person to discuss energy policy.
All right, Brian Sullivan, thank you very much. And from energy policy to automobile sales, Toyota out with its numbers for March, and they are pretty bleak. Let's go to Phil LeBeau with the numbers. Hi, Phil.
Tyler, they are bleak. In the first quarter, Toyota sales here in the United States falling 8.8%, just a little bit weaker than the Edmunds estimate of a decline of 8.6%. But forget about the first quarter, because we knew that January and February were relatively strong. What happened in March? GM and Fiat Chrysler have not told us what happened in March. They only give us Q1 sales. But not Toyota. They gave us the month of March. This is a glimpse of just how bad it is for the auto industry. A decline of 36.9% for auto sales in the month of March here in the United States for Toyota. Guys, you combine that with Hyundai saying they were down 43% last month, and a few other automakers who we're expecting to hear today. Bottom line is this: the auto industry in March has pretty much shut down. You can expect that to continue into April. The question is whether or not the incentive offers that are going to be coming through maybe in April and May, and they're out there already now, when do they start to get people to come back into the showroom?
All right, Phil, thank you very much. Phil LeBeau on the numbers out of Toyota. From those brutal car sale numbers to the ugly start to the second quarter on Wall Street, let's welcome in Jeff Mills. What an introduction, Jeff. I'm sorry to be such a downer there. He's the Chief Investment Officer for Bryn Mawr Trust. Jeff, good to have you with us. What do you think about what we're seeing today? A lot of people are saying that what's really taking place this afternoon, is that
the monetary authority go
It's Wednesday,
financing
halfway to
governments.
the weekend. But why wait?
So we
Make
obviously
tonight your big movie night in with Sky Store.
Elsa, go to the enchanted lands and
sure that they're able to get their funds out. I think that is completely appropriate.
What are CEOs and even the mom and pop stores in your district telling you now?
Well, unfortunately, a lot of those organizations have laid off a significant amount of their hourly workforce and frequently a relatively significant part of their salaried workforce. I would say that is particularly true when you think about organizations that have been severely impacted by the nature of this public health crisis. So retail, particularly to the extent it's stores that are being closed down, restaurants, the same thing to the extent extent that they can only provide takeout or are not providing any services, anything travel related. So in those areas, the layoffs have been quite substantial. I am expecting initial claims to continue to go up quite dramatically, and I would expect that the unemployment rate would rise quite rapidly as well.
Do you have a number on unemployment or one for GDP?
So I would focus that our models are not particularly accurate. At this stage, we rely on models that primarily use historical data. The last pandemic was more than 100 years ago, so that's not in our database. So the ability for us to use our traditional statistical models to get the kind of accuracy we would normally have don't have the history of these kind of events. So I would take any forecast at this stage with a large grain of salt, and I would also add that a lot of the forecasting is tied to how significant the social distancing works in enabling people to come back to work and for people to be healthy. Those are still in the early stages of understanding how successful we're going to be with that, but I would expect that it's quite likely by the end of this quarter that we'll see an unemployment rate that's probably going to be north of 10%. Hopefully not a lot higher than 10%, but I think it's that seems ballpark reasonable to expect. I think the bigger issue is whether we're able to contain problems both in the public health sphere and also the financial spillover sphere to make sure that that unemployment rate doesn't stay as elevated over time.
One last quick question. You're going to have perhaps trillions in lending to American companies, big and small, and that'll be at near zero rates. Are you ever going to be able to move rates higher given the risk to borrowers? Or interest rates now, for now at least, finished as a Fed tool?
Well, I think the federal funds rate is now as low as it can get without going negative. My own personal view is that we should probably avoid having negative short-term interest rates. So that vehicle, I think we will not be able to use in the near term. But these facilities are providing significant amount of stimulus. The purchases of long-term treasury and mortgages are providing stimulus. So we're bringing long-term rates down. But there are limits to how much these programs will be able to get the economy running, and some of this relies on fiscal policy being effective. So we just had a very large bill passed. It wouldn't surprise me if we're going to need more fiscal stimulus given the nature of the shock.
Eric Rosengren, the president of the Boston Federal Reserve Bank, thank you very much for joining us today.
Nice talking with you, Michael.
And that was the interview that our own Michael McKee conducted earlier today with Eric Rosengren, the president of the Federal Reserve Bank of Boston. Mike McKee is going to be along with us at the top of the next hour, Carol, to talk about that interview. But also, he has just had such a nice run of these big Fed interviews. More to come on that. So really eager to get his perspective.
Yeah, exactly. And also coming up, we're going to get the perspectives of various individuals, and that includes Alan Patricoff, well known in the venture capital world, also a Democratic fundraiser and strategist. So we will talk with him about the election. Let's not forget we are in an election year. And then well-known chef Daniel Boulou, he's going to check in with us as well, Jason. He too has shut down all of his restaurants in New York. He plays, though, on the global stage, so we'll see what he has to say about the impact that he has seen firsthand.
Well, and we're going to take you inside the magazine, as we always do. Cynthia Coons talking about a really important issue, I know, to everyone out there, which is mental health during this crisis. It is incredibly important, especially as we settle into what seems like a longer and longer period of isolation in many ways.
And coming up in just a few minutes, we're going to sit down with the president and CEO of CVS Health Corporation, Larry Merlo. He will be our guest. Let's get to Charlie Pillett with a check on the markets.
And we are looking at a down day. Carol Masso with the Dow, the S&P, and NASDAQ steep losses to begin the second quarter. Investors bracing for a longer economic shutdown that is likely to devastate corporate profits and dividends. S&P 500 index down for the third time in 4 days. Here's where we stand. We've got the S&P down 100 2 points now. That's a drop of 3.9%. Dow Jones Industrial Average down 808 points, lower by 3.7%. And NASDAQ down 285 points. For NASDAQ, that is a drop of 3.7%. 10 years up 10.30 seconds. That yield right now, 0.63%. Gold up 0.4%. 15.83 the ounce. And West Texas Intermediate crude now advancing 2.2% to $20.92 a barrel. WTI up by 44 cents a barrel. Recapping S&P down 102 points. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Yes, indeed, Charlie. Thank you so much. All right, joining us in just a moment, we're going to check in with the CEO of CVS Health Corporation. Keep in mind, they are on the front line seeing the impact of the virus first and foremost. We do want to welcome all of our viewers on Bloomberg Television. This is Bloomberg Business Week on Bloomberg Radio. And let's bring in Larry Merlot. He is president and CEO of CVS Health Corporation on the phone from Woonsocket, Rhode Island, where the company is based. Larry, thank you so much for joining us. We do hope you and your family are doing well.
Carol, we are, and thanks for asking, and thanks for having me.
And as I mentioned at the top, you guys are on the front lines. You are seeing this firsthand and dealing with it. Your workers are. A lot has been written about, and rightfully so, about those frontline workers. You've got about 300,000 colleagues across all 50 states, also Puerto Rico, Washington, D.C. Tell us a little bit about your workers and how they are faring and what you are doing to ensure that their health is not compromised.
Well, Carol, we are in a unique position to help address the pandemic, given our physical presence in communities all across the country and the ability to reach millions of consumers with local solutions. There's no question the health and safety of our colleagues and the customers that we serve is our number one priority. And, we're taking the necessary steps to ensure their well-being. And I could not be more proud of the work that they're doing. There is a strong purpose in our colleagues wanting to play an important role in helping their communities manage through this. And every day we ask ourselves the question, is there more that we can do? And that mindset has led to several actions focused on access solutions as well as the safety and health of those we're serving.
Well, Larry, tell us about some of those, because as you alluded to, and as we all know, this is a fast-moving situation. Feels like every day, as you say, presents new challenges. What are some of the steps that you've taken in the more recent days to sort of ensure worker safety specifically?
Yeah, certainly, as I just mentioned, none of this happens without the extraordinary commitment of our employees. And, we have done a number of things to provide some peace of mind and help them navigate through these times. And, we're providing cash bonuses to our pharmacists, other healthcare professionals who are on the front lines, our store associates and managers, and other individuals that, are important in terms of their work being site-based. We have been launching a new offering to help employees that, have dependent care needs while providing sick leave to part-time employees for the duration of the pandemic. And like many others, we have been working around the clock to provide PPE and other safety measures, including protective panels at our pharmacies and our, front store checkouts, just to name a few things. And again, I couldn't be more proud of the work that they're doing.
Yeah, and from what I'm hearing is, because I know you guys are going out, Larry, as well, and you're looking to hire, I think, about 50,000 full or part-time workers just to meet demand, because you've got delivery, in-store, distribution jobs that need to be filled because of the rise in demand that you're seeing.
Well, Carol, that's right. We announced a goal of 50,000 full-time, part-time, and temporary roles across the country. That includes some open job requisitions that we had, but it also includes making sure that we're providing, our frontline workers the relief that they need. And, we've been working with companies, across the country, companies largely in, travel, hospitality, in terms of transitioning employees. That makes up a lot of the temporary staff. And, over the past week, we've probably hired about 5,000 employees. We've expedited our hiring as well as our onboarding process. And, we've gotten tremendous cooperation from those employees. And look, it serves a need for us during this period of time. They want to continue to work. And, and I'm sure as their companies, we get past this pandemic and their companies get things back online, I'm sure there'll be an opportunity for those temporary workers to go back to the companies that that they're committed to.
And Larry, it sounds like then for all of your existing workers going into this virus, that you are keeping everybody employed, and so you're taking care of those workers. They will continue to get a salary, they will continue to get paid, they will continue to get health care. These are your workers.
These are our workers, Carol, and that's absolutely right. Our workforce is approximately 300,000 across the country. About 100,000 of those colleagues work in office-based locations, and our technology team has also done a wonderful job. We have about 80% of those office-based workers who are working remotely. The balance, they make sure that the lights are staying on for our call centers as well as our stores, and that leaves about 200,000 colleagues who are front lines, and again, they're doing terrific things in supporting the needs of our clients and customers.
And so, Larry, just staying with the workers for a second, what are you hearing back from them in terms of what they're seeing in the stores? As you have mentioned, I mean, you guys have eyes on this in ways that many don't. I mean, there are numerous CVSs in my community, I think in Carol's as well. What are they saying back to you in terms of what they're seeing in the stores?
Well, Jason, first of all, they're greatly appreciative, of the role that we're playing, and I think you touched on this just a minute ago. One of the things that we've done for our customers is, to increase access to medication. We have waived charges for home delivery of prescriptions and related products, as well as laxing the limitations in terms of people getting prescriptions refilled early, especially those with chronic disease who are on maintenance medications. And we've seen a tremendous increase in the utilization and the need for home delivery. You think about seniors not wanting to go out of their home, and they're appreciating that service. Certainly we've seen a spike in our front store products, especially the cleaning, the sanitizing, wipes, and our supply chain team is doing a great job in terms of working creatively and fast and furious, working with suppliers to keep our shelves stocked. And and we've also done things in terms of increasing access to virtual care by waiving telemedicine fees, encouraging patients to utilize that available resource. So it has. I think it's been a very rewarding experience for our frontline associates because they've gotten a lot of positive feedback from those that they're serving.
And Larry, on the point of pharmaceuticals and folks stocking up on prescriptions, we certainly have heard about that anecdotally. Are you experiencing any shortages on that front in terms of medicine specifically? We all know about shortages of toilet paper and other sundries, but when it comes to medicines, are you seeing any shortages in the system at this point?
No, it's a great question. And with respect to the pharmacy supply chain, we have not experienced any disruption to date. We have been in constant contact with our suppliers. They tend to carry about a 3 to 6 month supply. And, you think about prescriptions that are dispensed today across the country, about 90% of all prescriptions are generics. And, we have the size and scale with our partnership with Cardinal Health in the creation, of a company that is called Red Oak Sourcing. And as a result, we have been able to diversify our generic supply chain so that we are not dependent on any single manufacturer for a product. So I think Americans can be reassured that the pharmaceutical supply chain is in good shape.
Well, and that's good to know. And I am also curious, Larry, and I think our audience is too, about what kind of increases you're seeing in demand from customers overall. You mentioned pharmacies and prescriptions, but what about at the stores overall? And is demand tapering off at all?
Well, Carol, keep in mind that in the pharmacy, and as you look at our retail stores, about 75% of the business that we do comes out of the pharmacy. So, much of that spike in demand has been, people getting their prescriptions refilled earlier instead of, later this month or next month. And by the way, we think that's a good thing. We do not. One of the things that will really compound the health crisis is if all of a sudden, people with hypertension or cardiovascular disease or diabetes stop taking their medications as prescribed, and we want to make sure that they're staying adherent to those medications. So we're seeing a lot of that spike in volume is really more pull forward activity. And as I mentioned,
so it's tapering. Is it safe to say then it's tapering off a little bit at some of your stores? It kind of after that initial rush.
Yeah, I would say, Carol, in some of the hot markets where we have shelter-in-place orders, we are seeing volume begin to taper off. And in the front store, there's no question that we saw demand on paper products, cleaning supplies, and people ensuring that their medicine cabinets are stocked. But again, pharmacies continue to remain open to fulfill vital needs for the customers that we serve.
So, Larry, let's talk a little bit about testing. That obviously is very front of mind for everyone as we try and assess this virus, its spread. I know that you and others have committed to do some testing in parking lots and elsewhere. Help us understand where we are in that, because by some reports, you've got one open, I believe, in Massachusetts. Presumably there's more to come, but help us understand the rollout here.
Yeah, Jason, we have worked closely with the federal and state officials, and to your point, we opened a testing site in the parking lot of a CVS pharmacy in Shrewsbury, Massachusetts, and and there have been very, very important learnings that have come out of that. Today we're doing about 150 tests per day. It is largely targeting healthcare workers and local first responders. I think one of the important learnings that we got, you think about the size of a CVS pharmacy parking lot. We have one drive-through location, and one of the important learnings was, think about what we can do if we're in a larger parking lot with many of the other facilities that are closed, and the ability to have 3 or 4 drive-through lanes, and to be able to exponentially do more tests. I think the other thing that is important is, as we've seen in recent days, through the FDA's approval of point-of-care testing, and the Abbott product, that is we're going to start seeing that in market, I believe, later this week. So, we are now working with state and local officials in terms of how we can work together, how we can get a local testing site up with multiple drive-through lanes and, in a much larger parking lot, and really focus on the point of care capabilities where we can do many more tests, anywhere from 500 to hopefully 1,000 a day. And those tests will provide for a more immediate response, where individuals being tested will know, within, hopefully an hour or less than an hour in terms of the results of that test. So that's the work that we currently have underway.
So, Larry, just clarify for me, because I know Jason and I were talking about this earlier today to just kind of get a feel. So you've got the one center in Shrewsbury, right? The virus testing facility, and you've also opened up some parking lots, correct, into secure testing sites. Can you give us an idea of exactly how many that you've got, and what's the plans to open up even more? I know the administration has been supportive of you and Target and Walmart opening up more test facilities, and I'm just curious, what are your plans to expand them, and are you still getting support from the administration?
Yeah, Carol, that we are continuing, that process, and as I mentioned, we are transitioning to more of the point of care testing because of, the capabilities that brings for more tests per day, as well as more immediate results for those that are being tested, and we hope to have several of those testing sites stood up early next week.
Okay, and that's for everybody, not just healthcare workers, but that's for everyone to access?
Yeah, Carol, the priorities will continue to be for the healthcare workers, the first responders, and the details around that, as well as how we can begin to test more broadly. We're working through those with state officials as we speak.
Well, and Larry, I'm glad you brought up state officials because, one of the things that we're certainly learning, and I know you know it even better than we do, is this is very uneven in terms of its spread across the country so far. And I do wonder what you're learning from that perspective because, again, as we've been talking about, you have eyes on the ground in a way, in a very specific way as it relates to people's health that few do. Help us understand what you're seeing sort of nationwide and the response as you assess it state to state.
Well, I think there's no question that as you look at the data, and certainly you've had reports and have had the experts be able to speak to that firsthand. That the shelter in place in those geographies that began earlier, it appears that it is beginning to make a difference, and I think what we're seeing is across the country some unevenness, if you will, in terms of those shelter-in-place orders, actually having an impact in the communities. Again, we are working with the local officials in terms of how we can be an important part of that solution in terms of getting that message out. Ensuring that we were talking about our employees, our colleagues earlier, and we're certainly emphasizing that if you don't feel well for any reason whatsoever, stay home. The additional elements that we have put into our pay and benefit programs do not put them in a position where they have to make that choice between I need a paycheck or should I stay home, and we're telling them to stay home. In some of the hot markets, we have begun to do temperature checks with infrared thermometers, and those will be rolling out to all of our stores and call centers over the next probably 7 to 10 days, as an added measure of safety.
Well, those reassurances as workers, and I think that's great to hear from you as a leader of a well-known company, a big company, because I think that's what individuals and workers certainly at this point, Larry, are looking for. One final question. How do you see the coronavirus pandemic ultimately changing the world? When we come out on the other side of this crisis, what do you think is going to be the most important, in your view, kind of underappreciated way that the world will be different?
Well, Carol, it's a great question, and I think one of the things that I'm proud of my colleagues is, you think about all the things that we're doing, and we're not going to let perfection get in the way of progress, and I think as this crisis is upon us, people are looking for solutions locally every day, whether it's in-home services. The increased utilization of telemedicine. We talked a lot about testing, the local sources for testing, and we've also seen the relaxation of some of the regulations so that healthcare professionals like pharmacists and nurse practitioners can practice to the top of their license, providing needed services and counseling for those we serve. So, I do believe that, when this is behind us, all the things that we're doing today that we weren't doing 30 days ago will be evaluated in terms of, what did make a difference. And, and I think as we sit here today, we can all use a little bit of optimism. And, we've heard recently that, there's a tremendous amount of work being done to find the vaccine. And, and I'm confident that our researchers will bring that solution. And if we can fast forward, let's say 12 months, and let's think about now we have a vaccine, and and now we have millions of Americans looking for access to that vaccine. And I believe that our pharmacists and nurse practitioners that are in communities all across the country will be at the center of that access solution.
Well, Larry Merlot, we really appreciate your time and the work that you and your team are doing, as you said, and as we've been talking about all along, very much on the front lines. I know key in our little community here in the suburbs of New York, and I think people share that view across the country. Larry Merlot is the president and CEO of CVS Health, joining us on the phone from Rhode Island. We really, really appreciate the time. Carol?
All right, let's get back to Charlie with a quick business news flash. Hey, Charlie.
Well, hello there, and here's what's going on. The Dow, the S&P, and NASDAQ all decidedly lower, deep losses as investors brace for a longer economic shutdown that is likely to devastate corporate profits and stock and dividends. The dollar rising with treasuries. Right now we have got the 10-year up 14.30 seconds with a yield of 0.62%. S&P down 110, lower by 4.3%. The Dow is down 860, down 3.9%. NASDAQ down by 4.1%. Federal Reserve Bank of Boston President Eric Rosengren says the rollout of a new lending program for small and medium-sized American companies may be still, quote, another couple of weeks away. And in an interview with Bloomberg Radio and Television that aired moments ago, Rosengren said the Fed's actions so far have helped somewhat stabilize U.S. markets for treasuries, mortgages, and commercial paper.
There's not much we can do about the health crisis that was created by COVID-19, but there are things that we can do to limit the amount of spillover to financial markets. And I think the fact that we quickly got our facilities up, and there's still more facilities coming, has helped in reducing the amount of financial spillover, but not completely eliminated it.
General Motors and Fiat Chrysler have given an early glimpse of the damage a global pandemic has done to their U.S. sales. Sales down 7.1% for GM, more than 10% for Fiat Chrysler in the first 3 months of the year. GM shares down now by 7.3%, Fiat Chrysler down by 4.8%. Gold up 0.5%, $15.85 the ounce. West Texas Intermediate crude up 0.2%, $20.50 a barrel. Recapping, S&P down by 4.2%. I'm Charlie Pellett. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Jason Kelly and Carol Masser. And I have to say, I learned a lot talking to Larry Merlot up at CVS Health about the pace of what's happening. And also, I mean, clearly a company that has to be very, very focused on the health and safety of its own workers, as hospitals do, right? I mean, they are on the front lines.
Talk about being stressed in so many different ways. I was thinking about it. So you've got, the CEO, his personal life and worrying about his family. He's got to worry about his company, his workers, and he's really worried about his customers as well. So changing what they can do to make it easier for customers to get everything that they need. There are people who are on prescriptions that, above and beyond the virus that need to make sure that they can get them. So they have really taken a lot of big steps to do that. And I got to say, I love when you hear a CEO saying, you know what, we're holding on our workers, we're taking care of our workers, we're going to keep them safe, and we're going to keep them employed, because that's what it's about in terms of getting also everyone through this crisis.
Well, and looking around the corner, too, and understanding that his business will be fundamentally changed by this. That much is certainly clear. And so I'll look forward to catching up with him as this goes on, and certainly after it calms down, because I think he, again, is very much on the front lines. All right, let's get to Bob Moon now. He's got world and national headlines. Hey, Bob.
Jason, thank you. We've all been asking this question: when will it be over? Or put another way, how soon until we recover? Today, two different answers. It won't be soon, but it might be sooner than you think. First, the answer that New York Governor Andrew Cuomo had to the question during his coronavirus briefing today.
What we're looking at now is the apex, top of the curve, roughly at the end of April, which means another month.
Cuomo, of course, viewing it from the perspective of some 1,100 deaths in New York City, 1,900 dead across the state, and the continued spread of the virus. And then there is the U.S. economy, still in a pandemic-induced downhill slide, with differing views on the future recovery. One optimistic view from Bloomberg's Irv Chapman in Washington.
The first 3 months of the year saw an upsurge in consumer spending, reflected in Bank of America's credit card usage. Chief Executive Brian Moynihan, in a Bloomberg interview, cited the trillions of dollars of federal stimulus.
You will see on the other side of this a rebound to where the economy almost gets back to the same size at sometime in next year that it was prior to this, which is a pretty fast turnaround.
Moynihan expects strong consumer spending to resume when they're comfortable going out to stores and restaurants again. In Washington, Irv Chapman, Bloomberg Radio.
The IRS and Treasury Department say Americans will start receiving their economic impact checks in the next 3 weeks. The payments are part of the $2.2 trillion rescue package signed into law last week. Global News 24 hours a day, on air and on Quick Take by Bloomberg. I'm Bob Moon.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Vattel Shah is Senior Project Engineer at Mott MacDonald, a global engineering consultancy with more than 16,000 employees. He earned his PhD at New Jersey Institute of Technology, and as an adjunct professor is helping NJIT students explore emerging technologies.
My focus is renewable markets, emerging technologies, the idea of floating cities. What are we doing to develop that? What will happen to the city on the water? Well, you're going to have waves hitting it. You're going to have solar. How are you going to develop plants? How are you going to develop vegetation and farming? That sort of thought process happens at NJIT. We actually plan out what will the city look like. How do we develop that? So in 10 years, we're actually ready to take on those challenges when we have our first development in the water. NJIT also has been doing a lot of work in self-healing materials, so taking the polymers and the new material that we have in our material sciences departments and putting them into things like concrete, things like steel, reinforcing our soil.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
I used to be a bit of a rubbish sleeper. I'd toss and turn all night. Somehow, I could never find the comfy bit of the mattress. It was a proper nightmare. That's what brought me here. Testing mattresses in the Witch Test Lab. We use a custom-made barrel rolling machine to simulate a decade's worth of use. And the mattresses that perform best are the only ones we recommend for your bedroom. Witch.co.uk. Our tests find you the best.
This is a vital update from the government about coronavirus. To help save lives, stay at home. Anyone can spread coronavirus. Only leave your home for the following reasons: to shop for basic necessities, to pick up medicine or to provide care to those who need it, to exercise once a day, alone or with members of your household. Only travel to work when you absolutely cannot work from home. If you have to go out for any of these reasons, always stay 2 meters apart. Do not meet others outside your household, even friends and family. Stay home. Protect the NHS. Save lives.
On this week's On the Media, we are awash in messages, but some messengers are more effective than others.
Ventilators, ventilators, ventilators. We need 30,000.
Meanwhile, some media outlets choose not to air the president's press briefings live, and media critics ponder what's the right balance between good information and all information. All that and more on this week's On the Media from WNYC. Listen to the On the Media podcast on TuneIn today.
Not all heroes wear capes, but most wear tights.
And here we go. That's underway. Cover. Rowan. Wait a second.
Keep up with everything happening in the wild world of pro wrestling with the TuneIn podcast. For expert analysis of the latest WrestleMania, turn on the WWE podcast. Or listen to the Steve Austin Show for no-holds-barred conversations with wrestling's biggest personalities.
It's good to be here tonight. It's an empty building. But
For these and more, search sports and scroll down to the world of wrestling.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the favorites tab. Pretty easy, right?
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
TuneIn makes it easy to be a part of the conversation. Just make sure push notifications are enabled to hear about breaking news and trending topics from around the sports world. You'll also get custom recommendations of podcasts and radio stations covering the sports and teams you care about.
Distribution channels or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know, with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President, Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day,